All right. 1 minute before the mic is up. All right. All right, guys. Peace, power, and profit. This is like 1 minute before the decision, right? 1 minute before Doug and Fresh is on. All right, let me get this is correct over here. We're good to go. All right. So coming on to go live to deal with this federal catastrophe, right? If you want to call it that. Markets are spiking up here, literally at 2 o'clock here. So let's see here. All right. So, all right, let me do this. Let's do this, right? Because I'm all over the place right now myself. And notably so, of course, because I got a lot of stuff going on myself. Trades on, business errands, and all kind of other stuff. Right. So markets are, yeah, okay, we spiking now, as of now, right? As of now, as you say. Let's see here. All right. So we are getting ready to go lower. Okay, here we go. All right. And we are back up. Okay. All right. So this is me just in a lot of ways, just making sure I kind of document this on the video side of things, right? On the video side of things. All right. So let's make sure. Okay. And I got to make sure my money is protected too, right? Because I do this for bread and meat, right? If I don't move, I don't eat. So forgive me, guys, if you guys coming in and like, what is this brother doing? He's just rambling. No, I'm up here watching my money. I'm protecting my money, and I'm also trying to make sure that everything is copacetic, right? So right now we're spiking. We're spiking hard. We just clipped over 442 on the spot. Tesla's up to 975. Microsoft is over 303. Again, it's hitting resistance around that same area it's been doing all day, 303, 304. So no secret there. Again, I think we will have to clear over 443 or at least 444, somewhere around there in order for the SPY to, I guess, signal that, it's about that life, right? Right now we're doing really well. We're squeezing. All right, so let me get my screen up so I can share this. So thank you all for tuning in again. I know I'm gonna get to everybody, so bear with me. Forgive me again. I'm just doing this in real time. The market is moving. I already came on late, so again, I've been busy. All right, been busy. All right, so forgive your brother on that perspective and nothing else. Let's go straight to the SPY here. Let's get that sharing. All right, so we can see that in real time if nothing else. And then we'll kind of do the back end of this, right? We'll do the back end commentary as necessary because we know Jerome Powell is going to speak at 2:30. We'll live stream that if nothing else. Outside of that, yeah, we just waiting to kind of see. So right now the market is excited about what they've read because the numbers, that have already came out in terms of what the Fed is going to do. A lot of this stuff was already they're going to say was baked in. That's already preliminary action. It's going to knee-jerk reaction. People going to just, okay, let's just buy the fear and let's just see, what he says after the fact. So we're watching that. We want to make sure that we're cognizant of that. And at some point the markets may definitely pull back, and again, that's the euphoria, right? That's the euphoria of this stuff. People get ahead of themselves and get excited and whatever. But we'll see. I mean, it's still again, just 2 or 3 minutes after the data just came out, right? Because they released their papers first and then they have the speech 30 minutes later, so people are digesting the extent of what particularly potentially could happen, right? So what I'm doing here is setting my mouse traps. Set the traps, right? I got my stop losses set, of course, in profit. I'm definitely up for the day across the board. I think only losing trade I got right now is maybe AMC. And it ain't a loss until you sell, right? But it's an option that, got a little time on it. AMC definitely bucked the trend and broke out and whatever, right? They need a lifeline every now and then too, right? So as of now, okay, yeah, stuff is going off now. So stuff is definitely starting to either trigger, or we're kind of at that point where the market's okay. There we go. All right. So yep. So something closed out. What was it? Oh no, Tesla's up. 5%. So I got like 2 Teslas on now. I closed off 2 of them. I had 2 calls into today on Tesla. Closed those off. Well, one of them off, and the other one is still riding right now. It's ripping. Obviously, Tesla's ripping. All right. So those ones I have that are still on up nicely. One of them I'm going to keep into earnings. The other ones I'm going to close out. All right. So right now, the one Tesla I have that swung, I think from last Friday, is up over 140, 50% right now. Spent like $2 for it, but it makes $3 for it. Now it's up to the roughly about near $500 on that trade. Let me see. I might can show it on my little camera here, but that little trade right now, rocking and rolling. This stuff never shows well on these little cameras when you got that glare. I know I need to have a close my little curtains here in my office possibly. But if it shows, of course, it's up. Basically, it's up about near $500, and the other one's up around about 400, somewhere around there. The one I closed out earlier, it was a quick scalp earlier. I made like maybe $200 or $300 off. There's like 280 something off of it. So overall, Tesla, got me up around about 1,000 plus just on Tesla alone. I got other stuff out there working as well, of course. SPY calls. I got a couple earning plays in Navient still working right now. Of course, they bombed on the student loan, heist or what they call the they was out there scamming people on student loans, so they get hit across the head. So I definitely showed them in the earnings. It's still it's up. Microsoft, I had bought Microsoft put, so I lost on that one, right? But I didn't go to zero, of course. It cost me it cost me everything. No, I'm just kidding. Now it cost me about $4 and some change. I ended up locking in at least 60, right? So basically that's like a loss about, near 380, somewhere around there. But I made it back on the other stuff. That's how the market works, right? That's how this stuff works, right? So get excited for that. Right. You balance and you move, right? That's the game of this. This is a game of risk, right? And I say game in essence when you understand the value, like, as a person who realizes the competitive aspect to this, you have to be cognizant of that. So you realize, hey, let me make sure, I understand the rules of engagement is my point when I say that. So I don't take it light, of course, but you get my point. You guys get my point. So yeah, Tesla's still surging right now. So Tesla's up really nicely. So those Tesla calls I have right now are banging up higher now. Now I'm basically up near 200% on the swing calls I have in Tesla. The one I bought intraday for a scalp, I closed that one out. And the 2 that I still have on now are swing positions that I swung into today. And like I said, both of those surging. Tesla now sitting at 980. S&P 500 is kind of flirting with this 443 back and forth. Again, yes, you see that we have definitely a support point around 442.50. Right, we'll see if that holds. If that goes, of course, that may shake a few people out. Right, so right now they're holding that position. And again, we don't, anything can happen where markets would turn around and it'll definitely turn around and do something totally different on you. Right, it'll do a 180 on you back to the downside. Right, because again, right now people just trading what they think they know about what the Fed is doing or going to say or this, that, the third, based on the numbers that were already kind of baked into what they're going to say. But that's tricky, right? So there's Tesla here. Tesla, again, definitely in squeeze, definitely in what they call squeeze mode, right? The ludicrous mode, right? Actually, the real car, right? They got the ludicrous mode on the Tesla vehicles. It's in ludicrous mode here. Look at that gap up there on Tesla, right? We're talking about $1,000 stock day in there. It squeezed from 960 up to 980, an additional 20 points on what it did already in the beginning of the day. Look, where we came into this thing gapping up from around 918 and we up to 982. So we're talking roughly around about 60 something, 70 something points, and the day is still not over with, right? So again, if the Feds come out and tightrope, talk a good message, right? Talk some good game, right? Tesla could easily go up towards near 1,000 before the day is over with, right? We know Tesla is known for having 100-point days, and today is no different, in terms of potentially it could happen, right? So right now, let me see if I got anything. I make sure I got all my stop loss set. I just trailing stops in on as well. I just got to protect my money, right? It's been a great, few weeks. It's definitely trading this market volatility, so doing very well. Day for day, you definitely clipsing over our little target of $500 a day. We've been blowing that out the water, right? We've been well into the thousands of dollars on an everyday, almost literally on the average perspective. A lot more, but being modest and humble within that. Of course, we work hard. We work hard for this moment. But yeah, so right now, again, watching, okay, Tesla starting to kind of, decompress a little bit. Here we go. This is the part of the game where you say, yeah, at some point, somebody gonna be cash registering right on the way out the door. Like, why wouldn't they, right? I don't blame them, because the name of the game was to make money, but it's basically right back down to that support point. So this is just shaking those traders out like we spoke about. And now you're waiting to see if it's going to squeeze and go a little higher from here. If not, we may have that retrace and break that and kind of pull back, and then they'll just wait to hear what the Fed's got to say, right? But the move is already, phenomenal, or it has already been phenomenal thus far. It's up to the individual trader to realize if they want to lock in some gains here, here's a good time to do so, right? Or again, you're just going to play. You're going to play into the into the helter skelter aspect of what the Feds can, will or will not, maybe not say, right? Who knows? But we do know one thing they cannot overlook is today is that inflation is on the table, and it's on the menu, right? It's the item of the day, right? It's the dessert of the day, right? Whatever, right? And there's no question, right? That's what everybody wants to talk about, right? How do you see fixing this problem, right? This inflationary problem, right? What are your tools, right? You always say you got unlimited tools in your toolbox, right? Well, you're gonna be like, well, you might need to pull them tools out then, because we need to make sure that everything gonna be straight. Because if not, we're gonna have some problems, right? If they say we don't want them problems, we don't want no problems, bro. All right. So right now, Tesla again pulling back just a little bit here. Again, that's profit taking. It's natural. Now, if it retraces the entire move, then it's lights. It might be lights out. It'll be lights out. All right, for some of these people who are still, sitting in waiting for, I don't know, something, maybe, who knows. All right, so there's one. All right, so I got stopped out of one. All right, more so, bird in hand beat one in the bush. No harm, no foul there. We lock that on in. Now that's $400. We'll take it, right? It was up near 600, but sometimes that's how the nature things go, right? I'm playing the ideal of the risk, understanding that I have levels of that I'll accept. Again, you can't time the exact top, you can't time the exact bottom, even though I could have definitely seen the resistance here up around that 987 area. So again, it's just a part of the business. No harm, no foul. Again, still up substantially on the day, across the board in terms of all my positions. I mean, everything is banging. Like, everything is banging. And that's fine. Again, so I'm doing this in real time. So of course, that's the risk of being on live too, because again, this is testing my multitasking skills, right? I got to make sure I protect that, what I'm obviously here to do. And that's have fun, make money, right? It's not so much about just trying to look like what you're doing. It's about knowing what you're doing, right? Knowing what to do. And, that way, we leave no stone unturned, no leaf uncovered, in this perspective of protecting what we've already procured, right? So there we go. So we locked that in. Now we're just waiting to see if we're going to bounce here. If not, let's go back to the SP 500 here. We see what the SPY's doing, Tesla's doing, of course. Let's go check on bro, man, the SP 500. Again, if you guys coming in, I haven't got a chance to get to the YouTube back chat yet. I'm coming. Bear with me. There we go. See, there goes the SPY. Okay, so now we pulling back. Again, this could be a fool's gold scenario here. This is just profit taking, right? So again, my gains got locked in. Of course, I was already, had trailing stops in. So I bought the call earlier this morning. Well, yesterday I swung calls into today, and I also bought an intraday one after closing out one of the puts I had. And so I'm just playing the levels. I'm just playing the pivots. So now I'm looking at VWAP like, okay, if we break here, that's going to get hey, I'm thinking about, what they say, thinking about, like the Fed be saying, I'm thinking about raising, whatever. But that's just the name of the game. So now we're pulling back. So now it's going to get real in the field, as they say, right? Now it's about to get real in the field. Now, this could be fool's gold or a bear trap. Again, I repeat, this can be a bear trap. So conscious of that, realize that, hey, this is how this stuff works, right? This is how this stuff works. You don't want to get too cocky, right? You don't want to get too cocky. Why? Because the markets will definitely make you pay if you jump too soon, right? If you jump too soon, right? So we're going to be conscious of that. Now you got the pullback, right? Here comes the pullback. So now my puts and other trades that I have in place should start working now. Now everything should start working, right? Now those things should start banging. So you expect SP 500 to bounce here in a second. You should get one bounce here. Let's see if it bounce here. It should, because again, that's a massive, 5-minute candle pullback there. All right, there goes that. Okay, all right, I got one of my positions just filled again. And so I'm just doing this in real time again, guys. You gotta walk with me for a second here. Bear with your brother for a second. But I'm just playing for it. I'm just playing defense. All right, playing defense. So that's one particular aspect of some more downside hedging, right? And then we'll wait for, if we can get a hard bounce, then we'll kind of play back towards the upside. We'll scalp into strength, as one would say, right? You play into strength, right? Or you trade into strength, right? So right now you got a hard bounce in. This is natural. This is definitely natural after such a massive candle or pullback there. So as you see, I just got filled on some downside protection there. That's my downside protection, going into Friday, right? That's some downside protection. We already cleaned the clock on the call side, right? Now we're just trying to play for some backside protection, right? You got to make sure you have your AR-15, whatever your little pellet gun, BB gun, or whatever you use. Make sure you have that in play to protect your money, right? Because that's what this is all about. All right, so those things are lining up. Now, if we continuously show weakness here, then by all intents and purposes, we're definitely going to be considering the ideal of really adding fuel to that fire, right? Adding fuel to that fire in that regard. So right now we're looking good there. Okay, we're good here. There we go. So now we're pulling back. So this is what I'm talking about. This is that downside protection I'm talking about here. Right. So this is exactly what we're doing here in real time. You guys are witnessing it, right? You're in the building, right? Thank you for tuning in if you're able to. We appreciate you as always, guys. You know how we roll over here. We're definitely a community-oriented environment here. And so now here comes the fight, right? Now they're fighting at or around this area of interest here. When I say area of interest, this little circle of interest here, that's a key point of support and particular resistance. In some cases, if you show it to the downside resistance, if you're going long in support, we'll see what happens here if it churns and chops out at around this point before Jerome Powell speaks. If it lose that, then you best believe we definitely getting ready to do some what they call some catwalking, right? Some cake walking, whatever they want to call it, right? Right, whatever. Right, it's about to go down. All right. All right. So let's see here. Make sure we don't have nothing else out there that's doesn't need to be addressed. All right, because right now you're definitely dealing with the potentiality of of some more market weakness here, because now again, like we say, when it gets baked or when it gets digested, we'll say that when it gets digested, when people digest the numbers or the ideal of what they think the Fed's going to do, right? That's when the reality kicks in, right? Reality kicks in at that point. And then you start seeing traders switch up, right? They start doing it must be two sides, right? Must be two sides. You switch up a little bit, and that's fine, because that's what we do here, right? We're risk assessors, right? We have to assess risk. We have to make sure that we're conscious of that. And the goal is, again, if you are an active risk trader, right? They call it a day trader, but active risk trader, you have to realize, what are your threshold moments, right? What is your breaking point, right? Or your profit, point, so to speak, right? And that's even when it comes to just locking in gains. So right now, so most of all my trades are going wells, and now they've triggered. I got the puts that I have on that were already on. I'm just watching those methodically, waiting to see if the SPY gonna kind of do anything at this point. Again, it's trying to pivot at around that area I was talking about. See, clear as day. There we go. We talked it up, and that's exactly what you're having. You're having some resistance to the downside and support there in the same lightness. So the bulls are fighting for that point there, that 438.67, whatever you want to call it. They're fighting that area there. So basically, we'll call it 439. They're fighting to keep that support in play because it's a natural bounce area. Of course, if we back the chart out a little more, we can see that, of course, we got some strength at around that point. You even got the gap up from earlier, right? That big old long, green gap up candle from futures market, that's at around that point too. So that's why that's an area of interest, I imagine, for the most part, right? Where they're playing that 439 point. Because if that goes, with some strength, then they can erase that entire move right there that we had through pre-market gapping up, right? And that's a gap down, particularly as far as like 436. That means that entire candle can get run on to the downside, right? And so that'll shake a lot of bulls out. Of course, that'll make a lot of jokers scared and skittish, which is natural, right? Because the market's already like, bro, I don't trust this. I don't trust this stuff right now, and that's fine, right? And that's fine because we know what we're dealing with here. So I'm just checking all my stuff, so y'all guys got to bear with me. So if I got alerts going off and all this stuff happening, I'm going to make sure I'm watching, right? I'm measuring, right? Making sure everything is solid, right? Because that's a part of this. So there we go. So now you're getting a little bounce again. So bulls are trying to parlay back, right? They're trying to fight back a little bit, right? Right? They kind of feel some kind of way because like, hey man, we were just riding a little bit, we was finna ride out, and now it's like, better get Mako. Better get Mako. Somebody scratch a little paint up on your car, right? Somebody keyed your car, right? They then keyed up the Bugatti you had out there, right? So now again, here we go. So now you got that potential backside. Here we go. The dead cat bounce, right? The proverbial dead cat bounce scenario starting to kind of shake itself here. So every bit of dollars that bulls have, available that they willing to kind of put to a risk assessment, they better definitely bring it now because again, if you break that area of support, it can get ugly. So as you see it now, it's showing at 438.75, right? So if you definitely break that, again, you got a big candle again that can be a run on where they can just take out all that liquidity from the pre-market gap up, right? So it was no secret why they did that yesterday. I was talking to, I think, Oba Jeremy. Like, why would they spike the market up on the back end of, after hours yesterday? What was that all about? Especially that had to do with Microsoft. Microsoft was tanking, and then all of a sudden it just spiked up and erased the entire loss that it did. So yeah, again, y'all know markets are, it's some people out who can't take L's, right? So they'll do everything they power to kind of show strength by using some of these, stocks as what, as the pretty much as a decoy, right? A crash dummy. Microsoft was it. So it's like, well, we'll just dump a lot of money into Microsoft since it's failing, and that'll help the tech, get a new lease on life, so to speak. And people don't run for the hill. So basically that just killed all the puts that was in it, because a lot of people like, man, this thing should be coming down. Guidance got to be weak. They can't price in, no more than what they've already kind of presented coming out of the last couple of quarters. They were starting to get to a point where they was starting to plateau. Let's be honest, a lot of these tech stocks were plateauing, moving on no organic gain value, so to speak. There's a lot of buybacks and cheap money kind of EPS beats, stuff like that. So Wall Street to play the field as long as they can, right, until it's time to kind of switch up their strategy. Right. So we do know in a high interest rate environment, tech stocks, are the first ones that are going to struggle in that environment. Why? Because they can't, play the game of just doing expensive buybacks, and they need to use that money for real, R&D, CapEx spending, et cetera, right? Again, you take away the punch bowl, jokers can't get drunk. Now they got to sober up and start thinking straight, right? So straighten up, straighten up and fly, whatever they say. So this is the reality within that. Now you're starting to see exactly that. So this is a massive battle going on between 440 and let's say 38.70 or 30, let's say 439, right? So within this little dollar here, we're just pinging back and forth. But this is more weakness, right, than it is strength. Why? Because you've already erased the gain that you had on the gap up, and you broke VWAP, which is a very important line. We call it the gun line, right? Tell them about the gun line, boss. Right? They lost the gun line there, like the movie Life. Now they're in trouble, right? You cross that gun line, we're gonna shoot your foot. We're gonna shoot you up, basically, right? So y'all know that, right? So here's the reality now, where we're now finna play again. We're finna play a game of, ping pong. We're gonna play back and forth to somebody gives, right? So right now, the Bulls, they're fighting, right? They have more to lose in this perspective, right? Bears don't. Why? Because if most of them didn't already short at the top, right? They took a short anywhere from this point, or we call that pivot there earlier, anywhere from that point to up to 443.75. They're sitting pretty right now, right? It's like shake them out. That's what they think they're saying right now. Shake me out, right? Come stop me out, right? So you're gonna basically need the Feds to talk or start, their speech value to come take those guys out, right? You're gonna need a very bullish, some bullish commentary from Jerome Powell to come take those put buyers out that bought their puts at around about 442.50 or 443. And it don't take much because y'all know our SPY is retarded. right? It can you I mean, one green candle will fly way back up here, really quick, like literally like 1 minute, less than 1 minute, if they hear anything that sounds bullish, right? So people want to have a reason to buy the markets. They know that there's not many other assets out there they can, get invested in. So they're still using the Tina theory, right? As they, there is no other alternative, right? In terms of asset, appreciation out there. So they're staying invested in stocks. I just say be cautious here, because if you're going to be buying some of these stocks under a lot of unforeseen pressure, just understand the risks that are involved, right? So here you go. See, now you got that gap going again. Here you go. Now you're starting to kind of fight back. They finna fight for VWAP. So now you got to close. See, that just like I was just talking about. See, you just need one candle. One candle will erase that entire move, right? One candle will erase that entire move, because markets are bat crap crazy, and you are seeing it right now in real time, right? So my little downside protection put I got that one. It's it's getting pummeled, but that's fine, because I got other ones in play, meaning flip side positions that in play in terms of a couple calls out there that's still working too. Not on the SP, because I sold all those earlier, locked in the profit, right? If I buy a call in SPY, I'm not going to do it until we take out the high, right? Yeah, I might be missing out on all this money right here, but I'm just using a very disciplinary perspective. Why? Because I do realize that even time you got your algorithms buying the market and you got candles spiking like that, a lot of that is just volatility. That's a lot of that is, how can I say it? A lot of that is, fear, hopium. It's a lot of that baked into that move, right? So it's nothing to be kind of like, oh man, this is just it's people trying to figure out how they're going to strategically place their protection in play, or their ability to kind of capture the volatility here, uh either in today's expiring contract, because a lot of people are buying the 0 DTEs today, days to expiration. They're buying intraday just for this move here, this move only. They're gonna burn day trade. They don't have $25,000 in the account. This is the day to trade the volatility. So everybody's playing that. So that's why you got these kind of abnormal spikes like this here, right? Don't be confused, right? So the more strategic traders will say, okay, well, I'm gonna give it to Friday. I'm gonna buy contracts in the Friday and potentially in the next week, right? And they're just waiting. They're just playing their position, right? As one would say, they're playing their positions, waiting to get more clarity on exactly whether or not they made the good decision thus far on the pivots that they chose to buy in at, right? Either to go long or to short the market with, right? So no harm, no foul there. Right. So yeah, I just like my Tesla position, like one of the Tesla I still have on that's still left out there working, it pivoted really hard, right? It pivoted, like really hard. And it's up another $150, right? It came down and it went right back up. Of course, that's the whole nature of this. Tesla as a whole is in that 968, 969 on the print. And I'm just watching here. I'm just waiting to see. And they got earnings tonight. So of course they moving for a lot of other reasons. They're using the market volatility as a way to kind of catapult their scenario too. But on top of that, they got earnings tonight. So bulls want to feel good about this situation. There we go. See, one candle will erase their entire move, like I said. And then we still in this is a 5-minute candle, mind you guys. That was the 5-minute dump. This is 5-minute pump. So 440, as we call 440, will be that that point of resistance. You got to break that resistance, close above it, and then make a move above it. The same way will be if we're breaking below 439 in this case, even 438.75. You want to be very picky, right? But that's just what's going on here. So this is that candle here where you won't necessarily want to go short, or you don't want to go long quite yet. That's just my opinion, of course, my opinion, because a lot of this is just a lot of people either liquidating, trying to get into the trade, trying to get out the trade, and it's going to be a tug of war to see who wins that, who wins that fight, right? So that's your levels would have been just like I spoke about earlier. You would have had to buy at 440 to pay the scalp up, or you would have had to short at 440 if you thought the market was going to continuously roll over, right? Clear as day. I mean, you see the line. That's definitely your your pivot, right? There lies your pivot. All right, so looking good so far. See thus far. Let me see what else I have out there that I need to pay attention to. I think everything else I have out there is protected at this point. Is making money. The only thing I have that's in somewhat of a red perspective is oh look, that one didn't battle back a little bit here. My AMC and that the latest little downside hedge protection that I put on the spot, right? And I put that on for a reason. Right? I put that protection on for a reason. So ain't no harm, no foul on that. All right. Let me see. And if it is, it ain't, it ain't down a whole lot. Yeah, so it's battling within this perspective here. Right, so roughly around about $60, right? $60 on that. So we're just watching it. So everything else looks pretty decent, so far, right? As of now, everything looks pretty decent, right? Definitely waiting for Peloton to roll over more, right? I got some what they call some sniper puts on Peloton. I just been buying into that Peloton story. I just think that thing gonna roll over into earnings, right? I don't see how they just, continues to keep kicking the can down the road, knowing what's going on. So yeah, about that Peloton, about last night, right? Say about last night. Yeah, about that. All right, so here comes the SPY again. Here comes the SPY again, right? All right, so coming down to test that VWAP again. So it has to, pivot off the VWAP here, right? Or it could get a little ugly, right? Or it could get ugly. All right. So, but we know those are lines, what they call lines in the sand moment, right? So we get it. All right, we understand. So yeah, Jerome Powell's getting ready to speak now. So we'll have to wait to see what he's going to do here, right? We're going to wait to see what he has to say. So let's get that going live. Let's see, where can I get that? Well, it's on YouTube, obviously, too, but I know I should have had it queued up. But like I said, I came on kind of, in the midst of all this, and I'm just trying to impromptu this thing. So y'all bear with me here. So let's find out. Well, we go to CNBC, one of those. So yeah, he's speaking now. So let's do this. All right, let's do this here. All right. So that way, okay. Let's just go straight to this, and we'll share that. We'll share his, him speaking while we're watching the chart too, right? So that way we'll get both. All right.
Maximum employment and price stability.
All right, there we go.
Today, in support of these goals, the Federal Open Market Committee.
Let me know if you guys can hear that clearly.
Near zero. Okay. And stated its expectation.
Of course, we don't have to watch Jerome Powell. We don't have to look at it, man. We don't need to see.
The committee also agreed to continue reducing its net asset purchases on the schedule we announced in December, bringing them to an end in early March. As I will explain, against a backdrop of elevated inflation and a strong labor market, our policy has been adapting to the evolving economic environment, and it will continue to do so. Economic activity expanded at a robust pace last year, reflecting progress on vaccinations and the reopening of the economy.
Come on, Peloton. Roll over, Peloton.
Fiscal and monetary policy support and the healthy financial positions of households and businesses. Indeed, the economy has shown great strength and resilience.
Y'all can hear it clearly? Thank y'all. Thank y'all again. Thank everybody for tuning in. I'm just not getting a chance to get around to YouTube. So
COVID cases associated with the Omicron variant will surely weigh on economic growth this quarter. High-frequency indicators point to reduced spending in COVID-sensitive sectors, such as travel and restaurants.
Right.
And activity more broadly may also be affected, as many workers are unable to report for work because of illness, quarantines, or caregiving needs. Fortunately, health experts are finding that the Omicron variant has not been as virulent as previous strains of the virus, and they expect that cases will drop off rapidly. If the wave passes quickly, the economic effects should as well, and we would see a return to strong growth. That said, the implications for the economy remain uncertain, and we have not lost sight of the fact that for many afflicted individuals and families, and for the healthcare workers on the front lines, the virus continues to cause great hardship. The labor market has made remarkable progress, and by many measures is very strong. Job gains have been solid in recent months, averaging 365,000 per month over the past 3 months.
Okay, I'm starting getting a little
over
drip
the past
right
year, payroll employment has risen by 6.4 million jobs. The unemployment rate has declined sharply, falling 2 percentage points over the past 6 months
Peloton. Roll over,
to reach 3.9% in December. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics.
Good.
Labor demand remains historically strong. With constraints on labor supply, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years. While labor force participation has edged up, it remains subdued, in part reflecting the aging of the population and retirements.
Stop.
In addition,
trailer
some
limit,
who
I guess.
would be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus. The current wave of the virus may
There we
well
go. Look at
prolong
the spy.
these
There we
effects.
go. See, not them downside
Over
protection.
time, there are good reasons to expect some further improvements in
There we go.
participation and employment.
So let's back it up so we can see exactly the extent of
Inflation remains
the count
well
that it's going to try
above
to run on.
longer run goal of 2%.
Let's see. That's if it
Supply
it
and
can
demand
turn around, still
imbalances
bounce too.
related to the pandemic and the reopening of the economy have continued to contribute
This
to
counter
elevated
right here
levels
we're
of
watching.
inflation.
See, there we go. Now it's
In
bouncing at the
particular,
air for a
bottlenecks
reason.
and supply constraints are limiting how
Look for
quickly
this counter
production
right here
can
to get
respond
eaten
to
up.
higher demand in the near term.
This is the counter we want to get eaten up
These
here.
problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. While the drivers of higher inflation have been predominantly connected to the
That's that
dislocations
resistance. You got
caused by
to
the pandemic,
take these guys out
price
here.
increases have now spread to a broader range
Take those
of
guys
goods
out
and
right there.
services. Wages have also risen briskly, and we
If
are attentive to the risks that persistent real wage growth
Right.
in excess of productivity could put upward pressure on inflation. Like most forecasters, we continue to expect inflation to decline over the course of the year.
all right. So
We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like
they
food,
fighting at that
housing, and
439.
transportation.
I told you.
In addition, we believe that
This
the
stuff is
best
great.
thing we can do
I love
to
this
support
stuff.
continued labor market gains is to promote a long expansion,
They fighting there.
and that will require
There you go,
price
Peloton.
stability.
Keep rolling over, Peloton.
We're committed to our price stability goals.
Peloton, straight
We
trash.
will use our tools both to support
Straight
the economy
trash.
and a strong labor market, and to prevent higher inflation from becoming entrenched. And we'll be watching carefully to see whether the economy is evolving in line with expectations.
Where we at? Yep.
The
Looking
Fed's
good.
monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. As I noted, the committee left the target range for the federal funds rate unchanged and
There we
reaffirmed
go.
our plan
Here we go.
announced in December to end asset
Moment of
purchases in
truth.
early March. In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2% longer run goal, the economy no longer needs sustained high levels of monetary policy support.
That part.
That is why we are phasing out our asset purchases and why we expect it will soon be appropriate to raise the target range for the federal funds rate.
Mm-hmm.
Of course, the economic outlook remains highly uncertain. Making appropriate monetary policy in this environment requires humility, recognizing that the economy evolves in unexpected ways.
They fighting. They don't want that thing to break.
So that we can respond to the full range
Here
of
we go.
possible
They might break.
outcomes.
Let's see if they turn it.
With this in mind, we will remain attentive to risks, including the risk that high inflation is more persistent than expected, and are prepared to respond as appropriate to achieve our goals. To provide greater clarity about our approach for reducing the size of the Federal Reserve's balance sheet, today the committee issued a set of principles that will provide a foundation for our future decisions. These high-level principles clarify
hedge funds and banks and bottle dippers. This is what they looking like right now.
And that reducing our balance sheet will occur after
they're already underwater because they start buying above 440, right? 443, 442. They're like, man, push it, man. Buy that dip. Help them out, ancestors.
Over time, we intend to hold securities in the amounts needed for our ample reserves operating framework.
There you go. They're still trying to hold securities.
Primarily treasury securities.
These people can't give.
Our decisions to reduce our balance sheet will be guided by
that may help Wall Street there. They want to hear that. They hold it on. They just hold it. See, there it is. See, you got to know what to listen for. This guy, he right.
The committee has not made decisions regarding the specific timing, pace, or other details of shrinking the balance sheet. And
see, that's the dovish part about this conversation right there.
And provide additional information.
They know people want to hear that, but that's that dovish part where we say that he has to come out and walk a tightrope. There it is right there. So this might spike the market here.
We at the Federal Reserve will do everything we can
to
achieve our maximum.
Somebody might say, you know what, whatever. We know you're trying to, save bulls. Clearly, right?
Thank you for the first question. We'll go to Chris.
Still sitting on that balance sheet. $9 trillion, guys.
Chair Powell.
He refused to give in. He refused to take the air. Look at that candle. Look at that candle.
That the Fed will hike rates perhaps every other meeting. but certainly in the past.
So the worst case scenario was if they was going to do a rate hike like today, like emergency rate hike today. They didn't do that. So that's positive for Wall Street.
A live meeting. And on that note,
hold on, let the question come out. Our commentary later.
Rate hikes,
Let me just,
even if it doesn't raise every meeting. Thank you.
Thanks. So as I referred to in my opening statement, it is not possible to predict with much confidence exactly what path for our policy rate is going to prove appropriate. And so at this time, we haven't made any decisions about the path of policy. And I stress again that we'll be humble and nimble. We're going to have to navigate cross currents and actually two-sided risks now. And I'll say also that we're going to be guided by the data. In fact, what I'll say is that we're going to be led by the incoming data and the
data already tells him that he's underwater.
We'll try to communicate as clearly as
like,
possible.
Like those lines are tied. You got to get him a new playbook. He need him a new script writer. He need him a new publicist. He didn't beat that drum too long.
A very different place than it was when we began raising rates in 2015. Specifically, the economy is now much stronger. The labor market is far stronger. Inflation is running well above our 2% target, much higher than it was.
Well above.
And these differences are likely to have important implications for the appropriate pace of policy.
Come to fight for VWAP now.
Beyond that,
that red line VWAP.
Thank you. Let's go to Victoria Guida at Politico.
Again, thank y'all for tuning in and being patient with your brother. I'm doing this in real time, so forgive me.
I wanted to ask, you were talking about the health of the labor market, and I'm curious whether you would characterize where employment, and also along those same lines, obviously rate hikes on the table this year. Do you think that the Fed can raise rates, bring inflation under control without hurting jobs and wages?
Sorry, just getting both parts of your question written down.
You need to write them down for.
I would say
Jerome, funny man. You're a funny dude. You're a funny dude.
Both sides of the mandate are calling for us to move steadily away from the very highly accommodative policies we put in place during the challenging economic conditions that the economy faced earlier in the pandemic. And I would say that most FOMC participants agree that labor market conditions are consistent with maximum employment in the sense of the highest level of employment that is consistent with price stability. And that is my personal.
Come on, Peloton. Roll over.
And again, very broad support on the committee for the judgment that it will soon be appropriate to raise the target range for the federal funds rate. The other thing is maximum employment.
Come on, Tesla.
Will evolve over time and through the course of business cycle.
Way to go, Tesla. Keep banging.
We're in now.
Keep making that money.
Increase the level of maximum employment that's consistent with stable prices may increase.
Come on, Tesla. I know you're trying to hold on. Despite making it worse for you.
As participation gradually rises.
And the policy path that we're broadly contemplating or trailer stop
be supportive of that outcome as well.
Let's put it at.
So
we all look nice.
The thing about the labor market right now is that there are many millions of more job openings than there are unemployed people. So you ask whether we can raise rates and move to less accommodative and even tight financial conditions.
Yeah, that'll put us around.
I think there's quite a bit of room to raise interest rates without threatening the labor market. This is, by so many measures, a historically tight labor market. Record levels of job openings, quits, wages are moving up at the highest pace they have in decades. If you look at surveys of workers, they find jobs plentiful. Look at surveys of companies, they find workers scarce. And all of those readings are at levels really that we haven't seen in a long time, and in some cases ever. So this is a very, very strong labor market. And my strong sense is that
still holding up pretty strong.
We can move
slightly
rates up without.
There you go, Spy. There we go.
Without having to,
severely undermine. Tesla's coming too.
I also would point out that there are other forces at work this year, which should also help bring down inflation. We hope, including improvement on the supply side, which will ultimately come. The timing and pace of that are uncertain.
Oh, there we go. Ooh, come on, Spy.
Is going to be
less
supportive of growth this year, not of the level of economic activity, but the impulse to growth will be significantly lower. So there are multiple forces which should be working.
The downside protection, boy, I tell you,
for inflation to come down.
Put the downside protection on
realize that the timing and pace of that are highly uncertain, and that inflation has persisted longer than we thought. And of course,
Than
we're
we thought.
prepared to use our tools to
Yeah,
ensure
okay.
that
Said
higher
that very
inflation
cheeky,
does
didn't
not
he?
become
And we thought,
entrenched.
yeah, of course. Because y'all trying to cater to the stock market.
Thank you. Let's go to
Idiot.
Nick Timrose with the Wall Street
Greedy
Journal.
behind,
Good afternoon, Chair Powell.
Anyway.
Nick Timmerhouse of the Wall Street Journal. I have a couple of questions
Come on,
on the balance
Peloton.
sheet.
Keep
The
working.
statement on
Dang,
the
there go
balance sheet
Tesla.
today calls for significantly
It
reducing your
executed, didn't it?
holdings.
Yep.
What does
It's
that
all right.
mean?
I mean,
And then,
it's
apart
up
from
like
moving sooner and faster to
$400.
shrink the holdings, are there
I
any
mean, I was
other
up like
ways
600 or
in which
something
you
on
or
it.
colleagues
This
are
700
seriously
and gave
thinking
back like
about
2 or 3. What? Yeah, 2 and 3.
recalibrating this process?
2 and 3.
And
Somewhere
finally,
around
how
there.
much disagreement is there
But that's fine.
around
That's
how
fine.
you should use this tool,
We're
including
not trying to
active
time the top. We're
sales
just trying to
rather
play
than
pivots
passive
and
sales,
potential alley
or
where we can get some good
changes in the
bounces.
composition
I mean,
of
again,
reinvestments?
beautiful
Thank you.
day so far.
So
Across the
I'm
board.
afraid
Up,
to tell
I
you
mean,
that
up really nicely
those are all
today.
great questions, and they're questions that the committee is
See, all
just
together,
starting to
let's see,
now. So we had
a
a
little over
discussion,
maybe
as you know, at the last meeting, an
2,700.
introductory discussion of the
Yeah,
balance sheet and
yeah,
came
got
up
to
with
be
the
a
issue
little
that
over
this meeting
2,700
we
and counting, of course. That's on today
gone through and
only.
carefully put together a set of principles at a high level, and those are meant to guide
Humbled
the
and
actual
hungry.
decisions we'll make
I
about
know
the
how this
pace and
stuff
about
go.
all of the questions that you're asking. And I expect
go
that this
check.
process
Come on,
will
Peloton, keep rolling
be
over.
something that we spend time on in coming meetings.
Nice.
I can't tell you how many, I can't tell you how long it will take, but, and then,
Yeah, there you go.
at the appropriate time, we'll provide additional
There we go.
information. So I did, the last cycle when we went through balance
Keep
sheet
rolling
issues,
over.
we did
There you
find
go.
that
Keep rolling.
over the
Let's
course
go.
of 2 or 3 meetings, for example, we did
He
come
said you're a
to
comedian over
get
Chris. I'm
better
with you.
answers
He is.
as well.
Ain't he
So
though?
we're just in that process
Dang
now.
it, Tesla.
and
I hate it
the
for you,
next meeting
Tesla.
will be
Ugh.
turning to,
I
more
know, right?
detailed
Sister Monica, ask a better question. What's going on over Rich B?
I would say
Over
this,
Brand,
the
everybody
balance sheet
tuning in.
is
Just not getting a
much
chance to get
bigger.
everybody. Oh, you on your other channel today, huh? Sister Monica, let me mod you up.
And the economy is much
Mod
stronger,
that channel up
inflation's
for you.
much higher. So,
Ooh, boy, look at
and
that.
I
Ooh,
think
that
the
thing moving
issue
down.
to-
Goodness,
and
look at
I
that.
said this, being willing
Again,
to
let's
go
look at some key
sooner
levels
than
here real quick. Like I said, we got to
last time.
retrace
And also
that tire
perhaps
move we
faster.
got from pre-market, right?
Beyond that, it's really
Man, look
really
at that.
not
Look at
appropriate
Microsoft
to
taking it on the
speculate
chin right now.
exactly what that would be.
Let's
But I
back the
would
camera.
point you to principle number 1,
See?
which is the committee
Hold up.
views changes in the target rate for the
Right.
federal
Well,
funds
we already
rate
there.
as its
Right.
primary
Just candle. See that
means of
candle there?
adjusting
We got to
the
take
stance
that entire
of
candle. Like I said earlier, guys, we
So,
take that candle out,
we do want the
it can
federal
get
funds
ugly.
rate.
And we're there now. That's why it's
want to
pivoting at the
operationalize
bottom of it. See, now we go.
we
There
want
we
the
go.
balance
Now we
sheet,
moving below it.
to
So we
be
took those
declining
guys
in a
out from this morning, the
predictable
pre-market,
manner, and
liquidity
going to
there.
be declining primarily
They out of
by
there,
adjusting
right?
rate
Those guys out
increases.
of there now. So now we're gonna get ready to test what yesterday's closing price, 434.47 is on the pretty much on the docket next. We should get a bounce at around 434.50 area if we get there early. We should get a bounce at around yesterday's closing price though. If it may bounce and pop back up slightly, but if we break on through it with strength, then that's gonna be real ugly for bulls because
sort of in the background.
let's see. We'll just watch it. Let me let it sit patient, right? Sit patient and eat. That's all I can say. Just sit patient and eat. Yeah, so that downside protection I bought, guys, y'all was here in real time. It's up nicely.
I think we have a much better sense, frankly,
Up around about what? Near $500. Up near $500 on that downside protection. I just bought it. And so that's a scalp around near $500 real quick.
For the markets and for us, so we're less certain.
Of course, if I
about that.
close
So,
it out,
again,
that'll be
I
great.
think our-
These are
pattern
things that I
will
bought for
follow
Friday too.
is
So
to
we're
arrive
gonna
at
eat.
a,
We're gonna eat till they run us off the dinner table.
and composition and all those things, and then announce that with advance notice, and it will start in the background, and then we'll look to have that just running in the background and have the interest rates again be the active tool of monetary policy. That's at least the plan. I can't tell you much more about any of the very good issues about size, base, composition, those sorts of things. But we'll be turning to all of those at coming meetings.
Thank you.
Thanks. Now we'll go to Neil Irwin.
Thanks, Chair Powell. It's Neil Irwin from Axios. Glad to be back. Sir, I was wondering if the
Okay, there we go.
volatility in financial
Now we got
markets
some more
will actually
downside. There we go.
strikes you
Picking
as
up.
anything, alarming, or that might affect the
Picking
trajectory
up
of
now.
policy.
There we go.
Conversely, to the degree that financial conditions have tightened some, might that be desirable in some
Woo, woo,
ways?
Gina.
Your tightening goals?
Get ready to break that point. I would say we should bounce right at that 434.50 area. See how we bounce, guys? This stuff ain't rocket science, guys. There's your bounce. If you're gonna play that quick retrace, you got to be very quick, very quick.
And you
Will it
also
hold?
know
That's what's
with
need to be
broader
determined
financial
here.
conditions, not one or two things.
That's
One or
what's to
two
be
market
determined
trends.
here.
And what we're always asking ourselves is, are we
Right.
seeing changes that are both persistent and material enough that of a change in financial conditions that they are inconsistent with the achievement of our goals? So that's how we're looking at that. And
yeah, all the smart people in the room looking at Jerome Powell right now, like, okay, here we go. We're getting ready to break it. Let's see if we break it this time. Let's see if we break that yesterday's closing price. See how they fighting it? They fighting. Oh, they fighting.
in terms of
Here we go. Let's break it. Break.
I would say
They fighting.
we
They fighting at that 430, 450. Look at them, boy. Boy, Wall Street don't like to take L's. They don't like to take L's. Boy, look at the algos there. Algos don't know which way to go. Which way did he go? Which way did he go?
And you have seen.
Yep. Now they're finna try. They're gonna try. They're gonna try. Boy, they trying. Look at them. That's Wall Street right there, boy. They don't like to take no L's. They feel like it's too soon. They like too soon. This ain't finna rock up maybe about another $2. All right, at least about near $2, as you see here. All right, it went up like 436, close to it. That's the market, guys. That's what makes this stuff crazy.
We have with market participants and with the general public are working, and that financial conditions are reflecting in advance the decisions that we make. And monetary policy works significantly through expectations.
Expectations, right? See, I got the perfect meme for Jerome Powell right now with that expectation.
Thank you. Let's go to Howard Schneider.
The lies, like, bro, give it up.
Hi, thanks, Chair Bell. Howard Schneider with Reuters. So for a year now, the statements referenced the benchmarks for this initial interest rate increase.
Oh, Jerome Powell.
Now that we're approaching that moment,
Hot
what
mess.
are the benchmarks going to be for subsequent rate increases? I know you can't stipulate the path, but how should we think about the criteria for the next step and the next step?
Oh, you're right. We haven't gotten to that point yet. We haven't made a decision yet, and we'll make that decision at the March meeting.
Here we go.
We'll make a decision whether to raise.
They know they got to raise.
I would say that the committee is of a mind to raise the federal funds rate at the March meeting, assuming that conditions are appropriate.
This is him trying to save the market.
We have our eyes on the risks, particularly
clearly
around the world.
Like everybody knows you got to. Like,
we do expect some
you not saying it now. Like, okay, that's a consolation to what? Maybe to make the Bulls feel good about their situation. And I'm saying that because if you intraday trading this, you understand that this is him tightrope. Like we talked about, nothing new to us. We knew this was gonna happen. We knew he was gonna come out and speak a dovish tone best he could. Best he could.
Question. The December steps have this copacetic sort of set of circumstances where inflation comes down without the federal funds rate ever getting over the estimate of neutral. Given developments since then, do you still think that's a credible narrative for the ultimate path?
My path is highly uncertain, and that we're committed to using our tools to make sure that inflation, high inflation that we're seeing, does not become entrenched.
Committed to what?
So a number of factors would be.
Funny.
It's not just monetary policy.
Funny money.
A number of factors are supporting a decline in inflation. As I mentioned, fiscal policy will providing significantly less of an impulse to growth. We do expect this year, although we do expect now that it will come slower than.
Come on down, Peloton. Stop playing.
That there will be relief on the supply side. So that too
Stop playing Peloton. Let's go.
should lower these supply side barriers, which are a big part of the story why inflation is high. In addition, monetary policy will be becoming significantly less accommodative. So the question is, we'll be asking this question all year long, and that will be, are things turning out as we expect? There's a case that for whatever reason, the economy slows more and inflation slows more than expected.
Yeah, still at 298. Still need to break that 298.
We see inflation at a higher level or more persistent level, then we'll react to that. And again, we're well aware that this is a different economy than existed during the last tightening cycle, and our policy is going to reflect those differences.
Okay, now this thing's starting to lock up now.
Thank you. Let's go to Gina Smialik.
1 second, guys. This some old, all of a sudden they got liquidity problems with
Let's go to Gina.
With the platform.
Okay, let's go to Steve Leisman.
Okay. Steve Leisman, get
Thank you,
CNBC.
thank you, Mr. Chairman. Mr. Chairman, I have one sort of technical question and one question on principle. The technical question is, if you're going to discuss balance sheet at next upcoming meetings and you won't begin balance sheet reduction until after you begin rate hikes, it seems to technically mean that you won't or can't begin balance sheet reduction until the summer. Is that correct? That's the first thing. Second of all, you suggested that.
Oh, that was a good question. Because now they're going to paint him into a corner like, why are you kicking the can down the road?
You would possibly be raising rates and running off the balance sheet at the same time. That's sort of a technical question. Part of it. The principal question I have is, you said it's going to be running in the background, but the statement on balance sheet principles.
This one here going to make him sweat.
Prepared to adjust any of the details of its approach.
This going to make Jerome Powell sweat. That's some good questions. I expect that from Steve Leeson, though. He's you know, he mad because he never got voted to be a Fed governor. So this is him poking fun at Jerome Powell right now. Sorry about this. It's pinging.
Surrounding the balance sheet. Thanks.
Let me see. I got.
Let me start by talking about that last paragraph. So you'll
see, he went to the last one instead of the front ones.
That,
could make this stuff up, bro. This, but it's better than it's better than the reality show.
Complicated one, and it involves inevitably surprises. And so during the during the
come on, Peloton. Let's go, Peloton. Let's go.
Now we didn't intend to do that.
Man, Tesla down to 950. God.
So we've got a pretty
I know, but you know, I already locked closed in. You know,
free to do this at any time. And
locked in those games, of course.
But if the situation turns out to be different than we had thought, we're not going to stick with something that isn't working. That's all that's saying. It's meant to be quite a general statement rather than a hint. So, I mean, I like to think that our philosophy of the balance sheet is embodied in these principles. So, you know, the idea that, for example, the federal funds rate is the primary means of adjusting the stance of policy, that will use
what's going over the snot ball in the building. Shout out.
The balance sheet to foster the dual mandate.
Like, share, subscribe, guys. Like, share, and subscribe.
After we begin the process of raising rates, and on like that. I mean, those are all the things that try to describe how we will proceed. But maybe at a higher level, to try to get at your question, you know, asset purchases were enormously important at the beginning of the recovery in terms of restoring market function, as they were right after in the critical phase of the global financial crisis. And then after, they were a macroeconomic tool to support demand. And now the economy no longer needs this highly accommodative policy that we put in place. So it's time to stop asset purchases first, and then at the appropriate time, start to shrink the balance sheet. Now, the balance sheet is substantially larger than it needs to be. We've identified
$9 trillion.
Like in amounts needed to implement monetary policy.
Remember, I told y'all that's what's going to keep the market up even when they start raising rates, and also slowing down reverse repo operation is what? Everything that's sitting over there in the what? Inside the reverse repo operations. $9 trillion. That's the balance sheet stuff he's talking about. Don't be confused, guys. We know what's going on. That's why we educate on this kind of stuff. That's the only thing gonna keep the market somewhat feeling like they still got a little, you know, fight.
I can't really.
That's a lot of liquidity that's still left in the market. What I'm saying, that money is already in the market. $9 trillion.
We're going to have another discussion at the next meeting, and my guess is we'll have at least one other discussion at the meeting after that, and you know, we'll tell you as we make progress, and we'll. But this joker trying to tightrope. Well, he tightrope walking. I should have had a tightrope walking meme right now. Runoff and shrinking the balance sheet at what we find to be the appropriate time. I wish I could say more, but honestly, we haven't made those decisions, and we actually haven't even really had the important discussions on a lot of the details that we will have at coming meetings.
Thank you. Let's go to Craig Torres.
Chair Powell. Chair Powell, good afternoon, Michelle, and Chair Powell, Craig Torres from Bloomberg. Chair Powell, at the beginning of the conversation, you said risks are two-sided. I'm wondering if you can elaborate on what are the risks to the elusive soft landing. Is Fed policy a risk, over tightening, or what are the risks?
That part.
And then second, Chair Powell, I have a quick administrative question. Robert Kaplan's disclosure of his securities transactions in a couple of months.
Thank you.
Or
Get him.
sooner,
This
you
one
and I
gonna
will
hurt.
File our tax returns and we'll list transactions and all kinds of things. And next to those transactions, we'll put dates. And Bloomberg asked for the dates of Mr. Kaplan's transactions.
Right.
The Dallas Fed is not giving us the dates.
Right.
And I don't see why this is a matter for the
because the American people know these people have been insider trading with their tax dollars. These are complete white collar criminals, and they're being protected by the government. They're being protected. Martha Stewart went to prison. We would have went to prison. These people get to retire with your tax dollars that they inside traded on policy with. These people frauds, bro.
To the upside in the views
Be quiet.
of most FOMC participants, and certainly in my view as well. There's a risk that the high inflation we're seeing will be prolonged. There's a risk that it will move even higher. So, and we don't think that's the base case. But you ask what the risks are, and
notice he didn't talk about the Fed Kaplan scenario first.
Policy to address all of the plausible outcomes, and that calls for us to be in position. We have an expectation about the way the economy is going to be evolved, but we've got to be in a position to address different outcomes, including the one where inflation remains higher. And of course, that is a risk to the expansion. You know, we've been saying that what we need here is another long expansion, which is the kind of thing we saw over the last, which is the record long expansion. We saw labor force participation rise. We saw wages persistently higher for people at the lower end.
Let's break that 434. Come on.
Obvious imbalance
Come on,
in the
Bulls.
economy that threatened that expansion. It could have gone on for years were it not hit by the pandemic. So we'd love to find a way to get back to that. That's going to require price stability, and that's going to require the Fed to tighten interest rate policy and do our part in getting inflation back down to our 2% goal. So I mentioned two-sided risks. You know, a couple things. One,
let's go. Break below. We should be breaking below at this time. This is the dead cat bounce. This is the dead cat bounce. Let's go. Break below.
It's just we have to accept that it's not over. And
we got to close below it, though. We got to close below on the 5-minute candle. There we go. We broke below. That's your dead cat bounce. Clear as day. Come on.
I would point to, you know,
come on.
Another risk is just further.
Let me protect this money. Let me protect this money.
Which could slow down activity.
There we go. Come on. Come on. There we go. Somebody just dumped a little bit. That's why you had that pop in. Somebody covered on the short too.
Come on. COVID policy may cause more lockdowns.
There we go. I knew that was gonna come though, but now that's resistance so far. He can definitely backtrack it though.
In addition,
so now that 434.47 becomes resistance.
There's plenty of risk.
It's short term, but it's just for window dressing.
We can't forget that.
Let's go. Let's get this money.
So that's there. That's what I would
Thank
say.
you, ancestors. Let's go.
I know you've been all over this issue with my colleagues, Craig, on the issue of information. We don't have that.
There you go, Peloton. Keep coming down, Peloton. Break 25, Peloton.
The Inspector General to do an investigation, and that is out of my hands. I am playing no role in it. I seek to play no role in it.
Never still breaking. AMC retracing.
I can't help you here today on this issue.
See,
and
the lies. They don't want to talk about the Fed insider traders. See, what you mean you can't help us? You're the one who's the.
Thanks for taking our questions, Chair Powell.
If he was in the military, them guys would be court-martialed.
A little bit about where you're thinking on inflation.
Let's go. Don't worry about it. We'll take it out the SPY. They sold at the top. No, mind y'all. They did insider trade and they sold at the top. 460, 450, 470. They were selling up there.
Quite close to target by the
right.
end of the year. And I wonder if you still think that projection.
Let's go, SPY. Let's go. Boy, them puts
puts
ringing the register right now. Let's go.
And I also wonder if you could talk a little
Let's
bit
go.
about the pathway to
Let's
getting
go.
that deceleration. Like how do we get from here 7%
Woo,
CPI
woo, woo.
to where you expect to be at the end of the year?
Downside protection.
So I'd say
like one of them up like near 400, the other one up.
You know, since
over 3.
The December meeting, I would say that the inflation situation is
quick up like quick little $700 on scalping. Just scalping the SPY here. That's up like $700 on that scalp.
I'd be inclined to.
These are just straight scalps here. It's not even.
Estimate of 2022
Let's go.
Core PCE inflation.
Let's get it.
Let's just go with that.
There we go. There we go.
Today.
Yeah, they're eating there. That's one of them.
This meeting, but I think it hasn't gotten better. It's
Yeah,
probably
that
gotten
glare,
just,
man, it
just
ain't
a
gonna
bit
show.
worse.
It's up.
And that's been the
It's
pattern.
up over 400
That's
now.
been-
One of them, I got another one's out there too.
Um,
It's eating.
I think if you look at the FOMC
I gotta figure out how to
participants, there's a range there,
fix that glare. But
and that range has
y'all
been
understand.
moving to the right for a year now. And by
Come
the
on,
way,
Peloton.
you
There
look
we
at
go.
other
Keep coming down,
forecasters,
Peloton.
Essentially, all
We
other
broke 25.
macro forecasters who do this for a living,
Let's go.
you've seen the same pattern. So, what do we think about that? Well, I think we wrote.
I'll be right back, guys. I'm letting it keep playing. I'll be right back.
In the December meetings, each of us individually. And I think to the extent the situation deteriorates further, our policy will have to address that. I mean, if it deteriorates meaningfully further, either in the time dimension or in the size of the inflation dimension. So that's how we're thinking about it. As I mentioned, though, I think it's part of this will be that the Fed, moving away from a very highly accommodative policy to a substantially less accommodative policy, and then over time to a policy that's not accommodative in time. I don't know when that will be. Those are the things that we're thinking about. That's part of it. Another part of it is that fiscal policy provided an impulse to growth over the last 2 years. That impulse will be less. In fact, will be negative this year. And so that's another thing. The other one is we will eventually get relief on the supply side, and the ports will be cleared up, and there will be semiconductors and things like that. Now, what we're learning is it's just taking much longer. So I think longer than expected, and that I think does raise the risk that high inflation will be more persistent. I do think we'll come off of the highs that we saw in the early part of this episode in the spring last year, but really, the question is going to be what is inflation running at, and so we'll be watching that. And our objective is to get inflation back down to 2%. It's also to provide enough support to keep the labor market healthy. The labor market is very, very strong right now, and I think that strength will continue. There's really a shortage of workers. We see it particularly among production and non-supervisory workers and people in the lowest quartile. You see very large wage increases. I mentioned some of the other indicators. So I think that's what we're looking at. And we're also, we realize, I think, as everyone does, that this outlook is quite uncertain and that we're going to have to adapt. And we're going to communicate as clearly as we can, but we're going to have to be adaptable and, move as appropriate.
Okay, thank you. Let's go to Colby Smith.
Thank you, Michelle. Chair Powell, when you talk about being humble and nimble about the path forward for monetary policy, does that also include the possibility of raising interest rates by larger increments and, say, doing a 50 basis points hike at some point if inflation does not moderate sufficiently? And should we interpret this approach as a departure from the gradual pace that we saw during the last hiking cycle?
So, as I mentioned, we have not made these decisions. We really haven't. And what I can tell you now, though, is that we fully appreciate that this is a different situation. If you look back to where we were in 2015, 16, 17, 18, when we were raising rates, inflation was very close to 2%, even below 2%. Unemployment was not at our estimates of natural rate, and growth was in the 2 to 3% range. Right now, we have inflation running substantially above 2%. And more persistently than we would like. We have growth even in forecasts, even in the somewhat reduced forecast for 2022. We still see growth substantially higher than what we estimate to be the potential growth rate. And we see a labor market where, by so many measures, it is historically tight. I think in a way, the least tight aspect of it is looking at the unemployment rate, which is still below our median estimate of maximum employment. If you look at things like quits and job openings, as I mentioned earlier, and wages, you're seeing, and just the ratio of job openings to unemployed, you're seeing a very, very tight labor market. Now, we also know that labor force participation is significantly lower. It's 1.5 percentage points lower than it was in February of 2020. Maybe 1 percentage point of that is retirements. Some part of those retirements are related to COVID rather than just regular retirements. So we think there is a pool of people out there who could come back into the labor force. But it's not happening very quickly, and it may continue to not happen very quickly as long as the pandemic is on. So that's how we think about that. We haven't made, to your specific question, we really have not addressed those questions, and we'll begin to address them as we move into the March meeting and meetings after that.
Let's go to Rachel.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. I'm wondering if you can talk to us about any metrics that the Fed uses to assess how inflation affects different groups of Americans, especially lower income earners. And are you worried that the Fed underestimates or can't effectively measure the impact of inflation on some of the most vulnerable households? Thank you.
So it's more a matter of, I think the problem that we're talking about here is really that people who are on fixed incomes who are living paycheck to paycheck. They're spending most or all of what they're earning on food, gasoline, rent, heating, things like that, basic necessities. And so inflation right away forces people like that to make very difficult decisions.
You don't
really
say.
The point. I'm not aware of
y'all caused it.
Inflation literally falling more on different socioeconomic groups.
Oh,
that's
wow.
not the point. The point is some people are just
lying.
really in prone to suffer more. I mean, for people
who are those people
economically
prone to
well,
suffer more, Jerome Powell?
Inflation isn't good. It's bad. High inflation is bad, but they're going to be able to continue to eat and keep their homes and drive their cars and things like that. It's more so that's really how I think of it.
Tragic.
And we
tragic,
control
guys.
inflation for the benefit of all Americans, but part of it is just that it's particularly hard on people with fixed incomes and low incomes who spend most of their income on necessities.
You don't say.
Which are experiencing high inflation now.
You don't say.
Thank you. Let's go to Edward Lawrence.
Thanks, Michelle. Thank you, Mr. Chairman, for taking the question here. So year over year, inflation's at 40-year high. The input costs for producer price index for all of 2021 was the highest on record. Some investors fear that the Fed might be moving too late.
Right.
They said no decisions were made on the path of rate hikes, but was a rate hike more than 25 basis points discussed today? And as a follow to that, because I have problems with the mute button, as a follow to that, you testified that the supply chain issues could be worked out by the end of the year. You talked about that today. The CEO of Ford, though, told Fox Business today that the chip shortage will last into 2023. So today you said inflation will start to ease this year. I want to drill down and get a timeline that you see as to when we could see that relief. Thank you.
So I would not say that I would expect the supply chain issues to be completely worked out by the end of this year. I do not expect them, and I have not expected them. What I would say, and I have been saying, is that I expect progress to be made in the second half of this year, mainly. Progress, because we're not making much progress. If you look at a ton of metrics, you can find some that suggest that delivery times are shorter and inventories in some industries moving up. But overall, we're not making progress. And things like the semiconductor issue they're going to be quite a long time. I would think they'll go more than through 2023. In terms of being too late, I would just say this: our policy needs to be positioned to address the full range of plausible outcomes, as I said, and particularly the possibility that inflation will continue to run higher more persistently than we'd expected. And we think we are positioned to make the changes in our policy to do that, and we're committed to doing that. And that's really where we are. In terms of your question about the size of rate increases, we haven't faced those decisions. We haven't made them. It isn't possible to sit down here today and tell you with any confidence what the precise path will be. But as we work our way through this meeting by meeting, we are aware that this is a very different expansion, as I've said a couple times, with higher inflation, higher growth, a much stronger economy. And I think those differences are likely to be reflected in in the policy that we implement.
Thank you. Let's go to Mike McKee.
Thank you, Mr. Chairman. I'd like to sort of weave some of the strands of your answers together and ask you, as you start to reverse policy, what your goal is. Are you going to be raising interest rates until you get inflation to 2%? Do you want to go below 2% so that on average you get a 2% inflation rate? And because you said we have to protect the employment part of your mandate, is there some sort of circuit breaker that would stop you from raising interest rates?
The market about the circuit break. Man, look at Tesla game. All those games
there's
back.
nothing in our framework about having inflation run below 2%. So that we would do that, try to achieve that outcome. So the answer to that is no. What we're trying to do is get inflation, keep inflation expectations well anchored at 2%. That's always the ultimate goal. And we do that in the service of having inflation. We get to that goal by having inflation average 2% over time. And if inflation doesn't average 2% over time, then it's not clear why inflation expectations would be anchored at 2%. So that's the way we think about that. What was the last part of your question?
I was asking if you're protecting the employment side of the mandate, whether there's some sort of circuit breaker there.
Nothing like that. I mean, I would say you have a tremendously strong labor market, and you have growth this year at forecast to be well above potential. I mean, people are forecasting growth. If you think potential growth is around 2, most forecasts are significantly above that for 2022, and that's even with policy becoming substantially less accommodative. So the labor market's going to be strong for some time. We ideally, what we're trying to achieve is inflation getting back down to 2%. And we're trying to do that in a process that accomplishes, that will also leave the labor market in a very strong position. And no one really knows what that will take. Again, I would say that it isn't just monetary policy that's helping inflation get down. It'll be supply side improvements, and it'll be less fiscal impulse, in all likelihood. So, but monetary policy will do our job. It is our job to get inflation down to 2%. And a situation where the two goals can be in tension is a difficult one. But I don't really think they are here, though, because I think a really significant threat to further strengthening in the labor market in the form of higher participation over time is high inflation. And also high inflation is taking away the benefits of some of these large wage increases that we're seeing now. So we do hope to achieve, and our plan is to achieve both of those goals.
If I could follow up, does the danger of tightening too much as policy works its way into the economy with a lag mean that you should go back to being more forecast dependent in making decisions rather than the state dependency you've been using as a framework for the last year and a half or so?
Their forecasts suck.
Particularly
we don't need forecasts now. We need real-time information.
If we saw a very strong labor market,
oh boy, here we go.
We would wait to see actual inflation before we tightened. And so that was a very state-dependent thought, because for a long time we've been tightening on the expectation of high inflation, which never appeared, and that was the case for a number of years. So in this particular situation, we will be clearly monitoring incoming data as well as the evolving outlook.
Let's go to Michael Derby.
Thank you for taking my question. I want to ask you, with the benefit of hindsight, and I realize, that is what it is, but do you feel that monetary policy and fiscal policy?
They're asking him some really hard questions. Finally, asking us behind some real questions.
Because the government response, collectively.
Meaning over the last few meetings, well, especially last year, they were very soft and dovish type questions.
No, I think
they hammered us behind now because they know he wounded, right? He definitely wounded. When they smell blood in the water, hey,
if you
it's
remember
on.
what it felt like at the beginning of the pandemic, literally the global economy shutting down in large part, including our own economy, and people going to their homes for weeks on end in masks, and there are no vaccines, and it could be a really long time to get them, and then you have economic activity
Tesla
drops by
retraced a
shocking amount.
whole
So there
80-point
was a real
move.
risk of
Golly.
lasting damage. And I
That's
think
the market.
Congress
So,
responded.
when calls were good,
remarkably
when they were good,
with
they made that
the
money,
CARES
moved on.
Act, incredibly timely, very
That's how this
powerful.
stuff works.
There'll always be flaws in these things, but in real time, it was a remarkable achievement. And we responded, and what we were able to do was
Listen to him
stave
bragging.
off a collapse of the financial system.
Listen to him bragging. Now he's bragging how he
beginning
did the biggest
and make
financial
time
heist
for what
ever in
really
American
needed to happen,
history,
which was the
giving all
income
that money to the
replacement and
wealthy.
recovery that Congress enabled
Boy,
with
this
CARES
guy,
Act. So
this guy.
now that was a lot. And what we did was a lot. And now, what we have now is we have the strongest recovery of any country, and we have a recovery that looks completely unlike.
But now we're finna suffer more on the back end because of the
so
fact
much
that
support behind the recovery.
you didn't levy
And we're managing
the proper
the
brakes when
relatively
necessary. You
high-class
just
problems
kept
that come
mashing the
with that,
gas
which are
pedal.
high inflation and
Greed.
a labor shortage.
Greed.
So, and these are serious problems, very serious problems.
Oh, wow.
That we're working as hard as we can on. Was it too much? Again, I'm going to leave that to the historians. But look, in 25 years, we'll look back at this incident, which will be a 2, 3, 4, 5-year period, and we'll say, we'll have a much better basis to make a judgment about the actions that people took. But
clearly,
all
it's gonna
founded,
go down in
though,
history
in
as
a very strong reaction.
y'all dropped the ball.
To
And you
a
had
unique
Fed governors who were
historical
insider trading taxpayers'
I
dollars.
guess I'll have to leave it at that. I hope I'll be around to see.
No, you won't be around. No, well, whatever. No, you ain't gonna be
Let's go
around.
to Gene Young.
Fraud, man. Epic
Thanks,
fraud.
Michelle. Chair Powell, some investors are expecting the yield curve could flatten or even invert after rate hikes begin. Would that worry you? And how important is that risk in the Fed's consideration for adjusting policy?
So we do monitor the slope of the yield curve, but we don't control the slope of the yield curve. Many factors influence longer term interest rates.
Here we
But
go.
it is something that we watch, and you will know that from when we had this issue a few years ago. And we take it into account along with many other financial conditions as we try to assess the implications of all those conditions for the economic outlook. So that's one thing I would say. Another is currently you've got a slope, if you think about 2s to 10s, two-year treasury to 10-year treasury, I think that's around 75 basis points. That's well within the range of a normal yield curve slope. So it's something we're monitoring. We don't think of it as, I don't think of it as some kind of an iron law, but we do look at it and try to understand the implications and what it's telling us. And it's one of many things that we monitor.
That's all. These guys next.
Can I follow up real quick and ask if it did invert, would you tie it to U.S. fundamentals, or would it be driven by a much broader set of factors?
That's a good question in real time. Obviously, U.S. long-term sovereign debt is an important global asset, and the fact that our rates are so much higher than other risk-free sovereign rates around the world may put something of a ceiling on our rates. I don't know, but it would really depend on the facts and circumstances at that time.
Thank you. Let's go to Brian Chung for the last question.
Chairman Powell, Brian Chung, Yahoo Finance. Within the context of just the broad effort to normalize rates, would you describe what you want to do as a gradual hiking? And then secondly, within the context of hiking cycles, it's often the talking point for financial stability and wanting to make sure that asset bubbles don't merge. Is that something that has also factored into the conversation?
The asset bubble conversation is definitely off the table now.
I would describe what we're doing along these lines. This is going to be a year in which we move steadily away from the very highly accommodative monetary policy that we have put in place to deal with the economic effects of the pandemic. And that's going to involve a number of things. It's going to involve, and does involve, finishing asset purchases. It's going to involve lifting off and it's going to involve additional rate increases as appropriate. And we have
Give us
we're going to
dates.
write down in March our next assessment of what that might be. It's going to continue to evolve as the data evolve. We need to be quite adaptable, I think, in our understanding of this.
What data? What else
The last
data
thing
do
we're
you
gonna do is
need?
we're
What
going
else do you
to,
need?
Have a couple more meetings.
And my
I think,
Tyrese
to
was,
talk
what
about,
else do you want from me?
allowing the balance sheet to begin to run off.
Man, raise them
and,
rates.
Do so in a predictable manner, and that's something that we will also be doing as appropriate. And I wouldn't I don't think it's possible to say exactly how this is going to go, and we're going to need to be, as I've mentioned, nimble about this. And the economy is quite different this time. I've said this several times now. The economy is quite different. It's stronger. Inflation is higher. The labor market is much stronger than it was, and growth is above trend even this year, let alone last year. So all of those things are going to go into our thinking as we make monetary policy. And you asked about financials that have concerns in connection with our policy. Is that your question?
Yeah, within the context of other hiking cycles, it seems like worries about asset bubbles emerging as a result of easy rates has been part of that. I didn't know if that was part of the discussion today.
I would just say this. We of course have a financial stability framework, and what it shows is a number of positive aspects of financial stability. But you mentioned really asset prices is one of the four. So asset prices are somewhat elevated, and they reflect a high risk appetite and that sort of thing. I don't really think asset prices themselves represent a significant threat to financial stability, and that's because households are in good shape financially than they have been. Businesses are in good shape financially.
Here we go.
Business loans are low and that kind of thing.
Here we go.
The banks are highly capitalized with high liquidity and quite resilient.
They're telling you that your household is taken care
there
of.
are some concerns
when you know you're getting hit across the head at the grocery store and the gas station and at the power bill place and utility bill place.
Has made some
These
very
people.
positive proposals there. And we also saw some things in the treasury market during the acute phase of the crisis, which we're looking at ways to address. But overall, the financial stability vulnerabilities are manageable, I would say.
Thank you very much.
Thank you.
All right, guys, they're going to end it there. They are going to end it there. All right, let's get over here. And they got a picture of the Federal Reserve down the street here in D.C. I need to go there and throw a little sack of flaming poo at the front door and speed off. Like, I got y'all ticket. Yeah, let's cut that off over there, because that was a whole lot of that was a very funny live stream, right? Peace, power, and profit, fam. We got Sister Monica in the building, over Marquise in the house, and there goes the bounce, right? You always get that bounce after you finish talking. Why? Because they coming in, now the Fed got to cut the print on. Like, cut the print on. As soon as you get off the mic, somebody hit the printer. Somebody print some money real quick. Save the market. This stuff is so comical, man. This stuff is completely comical. As soon as he finished speaking, all of a sudden you got this big old green candle. Like, seriously? Like, people waited to finish covering their short after he finished talking, as if what he said doing it was any different than what the aftermath is going to be. So the markets are funny because you expect it, but we enjoy watching this stuff because it's so it's just so comical. It's so comical. So what's going on, Sister Monica? How's your day? I guess I should ask, what do you take from all this conversation today surrounding the Feds? If you have a take on it.
Hey, peace, power, and profit over and everybody in the chat. Listen, I don't know whether to laugh or to cry when he said, well, those people who are gonna suffer.
Right.
Hopefully they got but they will be able to buy food for their households. I'm like,
did you hear that? That part?
Well, basically saying those people who ain't gonna make it weren't gonna make it anyway.
Didn't it? Basically, in a nutshell.
Yeah.
I mean, that was just a blatant disrespect and again, being desensitized to the value of people who are actually hurting.
Yeah.
As opposed to those who benefited from him being overly aggressive and just constantly just printing money, and send it to the stock market as opposed to main streets. So again, just another extension of the disconnect that we have to deal with when people are out there who don't understand how this game works in terms of America being a corporation. It's a business. It's not about no freedom. It's not about no pursuit of this or pursuit of that. It's about the pursuit of being able to capitalize off a system that's pretty much is a conglomerate of a bully that shakes down the entire world for resources and a decadent culture, and they're just trying to get all they can out of it before the jig is up. At some point, people are gonna have to start realizing that the path to wealth creation is not necessarily feeling like you just got to work, sit there and take what everybody giving you and just working hard and receiving less for working twice as hard. So you have to find other ways to be able to increase your opportunity in this scenario. So just like when people do come here, like the immigrants come here, they come here already knowing what the game plan is.
Oh yeah,
get what we can and send that money back to our homeland.
Send it home. Yeah,
we're over here like, oh, we got time. We got time to play around. We got time to sit here and act like, no, I just need to get another 2-3 jobs. I just need to keep working harder that way. Like what?
You know what? When he said don't worry about it, they still gonna eat. I said, oh, he basically saying they just gonna go apply for food stamp and we're gonna give them some more.
Right.
Like they just those who don't worry about them, they're gonna still be able to eat and feed their families. So basically that's what I got. Oh, they just gonna go apply for food stamp, don't worry about it. And people should have actually taken that. Those who always worry about if the government is worried about them, they not even worried about you at the bottom. Because he basically saying, basically saying, well, everybody else is good. What's the problem? I don't see no problem, even with the little inflation. That's
exactly what he was he dog whistled out so loud and made it so plain too, because again, a lot of people had to sit there and those who are obviously initiated understand exactly what he's saying. And again, the performance today was definitely every bit of a C minus, because again, that's that tightrope value that he had to try to perform today, because he knew he couldn't downplay the previous conversation. Why? Because people already know his playbook, right? Like, he started, disseminate all the ammunition he had, but pretty much, he dissolved himself of it. So it's now so much like, okay, well, if you kick the can down on the road on certain things and hope Wall Street kind of give you, I guess a pass on that, because again, you don't want to upset markets. Why? Because you're a trader first before you are economic, I should say like a seer, right? Of trying to say, well, let me make sure I protect everybody, right? Because obviously that's not his mandate. Even though he has to lie and say that's his mandate, he's more market centric, right? And so the fact that he has to stop what he's doing in terms of pumping markets, because obviously that's what he knows he's doing, it hurts him to just come out and say that, no, we got to do something to make sure we get people to a place where they can feel comfortable and safe in this situation. And we know that we're partially responsible for the back end of this inflation that's starting to kick in right now. He dare not tell the truth like that. Why? Because he know the people gonna come for his head. But it's the right thing to say. It's the truth. So again, you hear people say, man, I trust the government. I did that and third. Again, it's not me swiping at people, coming at people, but I just got to say this. This is the part of the game where a lot of people out here don't understand how America really works. They need to pay attention to these kind of conversations, right? You need to get out those echo chambers and come to the money, because we always say follow the money for a reason, right? There's purpose and directive in terms of where money flows and who's can control to be able to move that money, right? And meaning to the fact that where they're making sure that money is available to certain people and certain people only is my point, right? Your tax dollars help fuel this, this euphoria, right? It helps fuel this foolishness that you are starting to see in governments, and you got Democrats and Republicans and all these different charlatans in their own right. Again, just stringing people along, just lying to them, literally lying to them in their face again, and people sitting there like, okay, I guess we got more time to wait, wait it out. We got more time to just wait. Like, what are you waiting on? Like, it makes no sense at this point to realize that again, everybody partook in the greatest American theft heist, financial heist ever in American history. Again, we're talking $9 trillion, guys, in under 2 years, like literally 2.5 years, if that you want to say that, but literally in 2 years. Like, somebody make that make sense to me. What wage increase you got enough to kind of help balance out the inflation? Again, this is what we talk about. You got your little 2-3% raise, then through your little crumb, the CEO, again, it ain't really hurting the executive bonuses. they found money to give it to you, because they're gonna just raise the margin price on their goods and service. So you still gonna get hit across the head at the grocery store as a consumer. So you ain't really winning. And the balance of inflation across the board in consumer goods and whatever, they're so high to the point where it's gonna chip away all that little money you got in your raise.
Not just
how
the
you winning?
grocery store, but McDonald's. You know,
Everybody, like dollar menu value, forget about that. Dollar Tree, everything $1. No, $1.25 now.
$1.25.
I got $1.25 for that bacon now, but I can't do it. Oh, bro, I can't do it. It's that serious.
Factuals.
I mean, couldn't make this stuff up. I mean, it's, oh my goodness. But again, you know, I don't want to sound hyperbolic and all excited and aggressive about this, but this is stuff that we just been talking about for the last couple years, 2-3 years. Have we not been talking about this stuff? You know what I'm saying? We've been going longer before that, but when it really mattered, because of the fact that we knew that they're starting to print money, you know, they've been doing the quantitative easing, right? We've been knew about the reverse repo operation that happened during the month of September 2019. We knew that was another extension of them padding the market, right? They used the tariff war as a excuse to start using that extension of the Fed, and that was just money they start printing already that was already running onto the balance sheet before we even got to COVID. You see what I'm saying? So that money is sitting on the books, and this new money is sitting on the books, and these people sitting around here looking at the average American. They got bad vaccine policies. They got bad employment, you know, readiness policies in terms of being able to help people, you know, in moments when it matters most. All this stuff that we've been taught about, you know, taught in school, that, you know, America's a, you know, ready first nation, right? They move swiftly. They got all these different, you know, so-called you know, institutions in play to protect the American people when it matters most, right? You pay into this stuff through your taxes, mind you. And then when it matters most, they're moving like the pace of a snail. Oh, these people act like they're incompetent. You know, it's all this bureaucratic red tape, this infighting between Republicans and Democrats, right? This is the ignorance of what people subscribe to in these political games, because that's basically what I call them. And they have no clue what's really going on behind their back. They have no clue. It's happening like right in front of their face, literally. But they still walk around like, I don't know what's going on. I guess that's just what, you know, give it time, right? That's the whole reality, right? They always want you to give them time to do what? To do what exactly? Like, how much history do you need as a timeline or data value to say, okay, well, yeah, maybe we need to start moving, you know, moving a little different than before, because the old way ain't working and people starting to catch on to it. But apparently they just know how to keep people inebriated and distracted with all this other foolishness, and they just allow this stuff to happen right in front of them. Again, makes no sense to me. But anyway, what do you think about it, Oprah Chris? What was this? What was this speech today? You know, what did it mean to you, by the chance, if you have any take on it?
No, it's something called filler and battle rap, and it's just you saying a bunch of nothing to get to a point, or you know, you telling the story and you just giving too much details instead of just getting to the point and making the story juicy.
Mm-hmm.
He did a lot of filler today, and he did a lot of lying today as well. Definitely a comedian. He was a comedian. This dude is finna mess over so many people. Not that he hasn't done
already
that
have,
already.
right? You just making it work. I know you was gonna say it. I knew you was back. I like mine. Like camera.
Facts. And he just like, you know, he just brushing it off like, oh well, yeah, you know, it's nothing. You know, we've been doing this anyway. But yeah, we ain't ready to, you know, take it to the next level yet. But just know, you know, stock market gonna be good, but you know, the poor people, y'all, you know, y'all pay for what y'all need to pay for.
Pull yourself up by your bootstraps, right?
Yeah. So he just basically just saying F us. You know what I'm saying? Yeah, I got to take care of my guys. You know, I got to take care of my guys.
Wall Street bankers, the fund managers, the Goldman Sachs, the JP Morgan.
Facts.
You know.
So, you know, he was just saying a bunch of nothing. He was lying, avoiding questions like he always do. I wish I could have just seen the actual video, because, you know, when you pay attention to, you know, his faces, he be looking up, he look left, look right.
Mm-hmm.
Yeah.
Facial,
so
I was watching it. Yeah.
But they be asking the right questions to press them.
Lately they have. You notice that? They hit them lately. I love
it. And I just wish, you know, more people would, you know, pay attention to this stuff, because this is the dude that's causing all the problems. the hell with Joe Biden.
At this point, definitely, it's all on, for the bulk of the problems, it's definitely coming on the back of all this excess liquidity dilution of America's money, of their worth. Again, the housing market up in turmoil, the commodity prices up in turmoil, the value, even with employment, you got a lot of jobs out there waiting to be filled. A lot of people ain't filling them jobs for many reasons. Why? Beyond the vaccine mandate that was out there, just got overturned by the Supreme Court. But the fact that, number one, the wage increases that these people are trying to even offer to get these people back to work ain't really worth what they know they've been waiting to get over the last 20 years to equal out that of the inflation, because they know inflation's not going away anytime soon, right? So people hesitate to go into that just to get tricked into a paycheck, and it's gonna still get ate up through inflation. Right? They ain't really through the people to really benefit that they needed throughout COVID, like a lot of nations did for their people. They sat there and made it act like they was pulling teeth to give you a little couple of funky little $1,400 checks, maybe 2 out of an entire pandemic dang there, and it's like, are you kidding me?
Right.
So you gave us pennies, but again, Wall Street received trillions and trillions of dollars of our money without our consent to a degree. Somebody make that make sense to me.
Facts. That's a highway robbery, highway theft. So, like you said, he was grabbing that rope. He was grabbing that rope tight, walking the thin line. And he didn't have to jump ship. I tell you that much, because he got pressed, but you can just avoid the questions and just talk about one specific thing that the person said, the reporter asked, and you can just avoid everything else until somebody else asks you a question. But the people that know, they heard and watched him, dodge the bullets. And the reality is, this is the game they play. And and it's a high level, 40 level chess moves that they do. And if you don't understand that, then you always gonna be lost in the sauce. But that's all I got to say about it.
Again, just an extension of, once you initiate it, as we like to say, you realize now exactly how to deal with these people, right? And I say these people because y'all know exactly what I'm talking about, these politicians and these institutions, right, that are set up to kind of really steer you in the direction of, again, for lack of better terminology, kind of steer you into the economic gas chamber, right? Because a lot of people who are in a situation where they ain't got no choice but to play ball, because they don't have they don't have backup plans. They don't have other, outlets and things that they can run to, so to speak. It's sad, right? Because exactly what's coming, down, in the future, right? When things begin to unravel and hit the fan. So it gets worse, obviously, when interest rates goes up in a lot of ways, more so than it goes down. It bounced out on the long end, of course, on the back end, but in the beginning, it's definitely gonna hurt. Why? Because like a lot of people, who were getting cheap money rates and this, that, and the third, banks make money obviously on interest rate. This is on their time, and they're finna get ready to start eating when the interest rates start going up. And then now that they know they got the power, all the power in their hands, then they can start acting shiesty and stingy, not really let money go down range like they were doing before because of COVID, because government was telling them, hey, let that money go. That's a whole new different can of worms, right? If people are in what they call credit card mode, now they blew through their saving, they blew through stimulus checks. Now they're using credit cards to finance their scenario now because of things, starting to hit the fan. What's next after credit cards? I mean, you're gonna be on the corner. What's next? You see what I'm saying? So if the banks get shiesty, don't even let money go down range at that point, it's gonna get, it can get ugly, right? Just not a doom and gloom speak. Just saying, hey, put everything on the table, itemize it, so that way you don't be caught by surprise when things go down. So that's why we say, of course, even in the moment when the markets are kind of pulling back and some of these stocks are being taken to the woodshed, and that's rightfully so, they need to pull back. They need to correct. Again, we like cheap things, right? We like to buy at a discount. No harm, no foul on that part, because we realize that's how this game works. So we just know how to play both sides, like we're trained to do, right? We're trained for this for a reason. This is just a moment where you say, okay, let's hit the reset button, right? Because America, again, is a decadent culture of entitlement mindset of people who don't realize the value of, again, having a cohesive mind play. Why? Because the history in itself, it came from out of division. It came from out of theft, robbery, rape, the whole nine. Y'all know the history. We ain't got to, repeat it, but it's good to say it sometime, right? The reality is that, again, at some point, you're going to have moments in history where you have that repetitive value, where it comes back to hunt, right? Or they say the chickens come on the roost. And that's how this stuff happens. Now, it's intermittent. We know it happens periodically. It's cyclical, right? But when it does, rear itself, yeah, we like, okay, we were waiting for this moment. We knew it was going to happen at some point. and let's see what their next move is, right? It's, we speak about 4D chess moves, whatever. Let's see what their next move is going to be, because that's going to determine a lot. And so just for the broader market conversation here, this is just another moment for the market to say, hey, okay, we ate good, we fat, we still try to, scrape every little piece of cartilage off the bone, right? They took all the meat off. They just eating cartilage now, scraping the cartilage off the bone. They just finna go get the bone marrow next. That's how greedy these jokers is. But we'll see, right? We'll see exactly what comes out of this in the long run, because we know at the end of the day, a lot of these stocks that we've been talking about with high PEs and stuff like that, they got to give up some of that, that froth, right? They have to shave some of that froth off the top, and that ain't a bad thing. That's not a bad thing, right? So we just rotate, find the value plays that are going to do well in an inflationary environment, and we just start feasting on them, right? No harm, no foul, right? But we do realize that we're not going to go into this thing blind and delusional and just with full of hoping the market going to bend to our will. Like your little peanut dollars can't move this market. I tell people that all the time. You see people who are really aggressively trying to, go against the grain of things sometimes when it's an obvious scenario, because they've been, kind of bought into a bad sell of goods that the market do no wrong, buy the dip, bro, all this stuff. Look, that's not how this stuff works. If you don't learn how to be balanced in this, again, it can be very painful on the back end, right? So we always talk about hedging. We always talk about protecting, your value. It's for a reason, right? Discipline matters at the end of the day, right? So we just hoping you guys, everybody take heed of that, and we stay, again, patient with our learning, with our understanding of this stuff, our competency level within this, and you don't jump out the window just to try to prove a point, right? To nobody, right? This is your money on the line here. This is your opportunity on the line here. So that way you protect yourself best as possible, right? So again, today, just like another day of kicking the can down the road much as possible. We know the reality is already staring the market in the face. They can't hide from it. The man in the mirror is definitely there. Right? Every time a joker even looks at something that gives a reflection of themselves, they know what's coming, right? So, for what it's worth, hey, these are good moments to kind of capitalize too. We scalped the market today. We, both sides, up and down, of course, and it was great. But again, long term, we know what's coming. Just be prepared for that, guys. And we'll see how the chips fall, from that point going forward. All right. So this was interesting as much as possible, because we know he's going to try to tightrope this thing. Boy, I just was tightrope walking. Right. It was just something, it was funny. Right. But again, we expect that. Right. We expect that. Right. So right now you got the back end dip buyers trying to come in. Right. This is just what they call trying to front run more of the pain. Right. This is what Wall Street do. Right. They say, well, nothing else. We just scalp on the back end of the day. A lot of people covered around 430. Right. Obviously, we won't have a pivot there because we have, a support point down that 430 area. And this is good, in that same lightness in that regard. So let them play this back in. You got 2 days to expiration for Friday's contract. They're doing everything they can. I mean, the market makers did not pay out those puts, that are just crazy. They can't close out the core. They're gonna be definitely trying to get those guys shaken out, right? Because they got to play what they call damage control. This is what you call delta hedging, right? Market makers now have to delta hedge all this right here, all that downside, Jamaican bobsled slalom, movement here. This is them trying to delta hedge all this right here, right? So they got to do everything they can to kind of try to force and put people out there, put positions early, because that's a lot of money that just went to the put side. A lot of money, right? Because these people who were just feeling very euphoric about the market coming into today, look at the gap up, right? You gapped up on what essentially? Nothing, like we said. I was telling Oba Jeremy this is no more than them doing what they call a lower high prop, pretty much a prop plan. It was a lower high prop plan. Gap the market up on no good news, because ain't no good news. You got the market up on. You got Ukraine, you got Russia, you got inflation, you got Fed, knowing they got to come out and talk a real talk, talk some real talk. So they got the market up from the future market last night. This was no more than what they call a lower high prop. How do we know that? Because again, if you back it out, you can clearly see what's going on here, right? You kind of had that cup and handle that fail. You pull back, you kind of get it back up there again to that resistance of 440. You failed at that 440 several times over the last, as you see here, couple of days, peaks there, peaking here. So clearly that was your line in the sand, right? There you go. You roll over from that point, based upon if the Feds can't talk a good game, that was going to be your launching pad to either run it back up towards 450, right? Then from there up towards 460, or, fall, lower from that point. So again, lower high prop, that's all it was, So again, at around points like that, you just know where to kind of add the levels of protection that you need to. Again, speaking to the traders right now, of course, but that's what we study TA for, right? Technical analysis, to be able to play pivots, right? We draw our kill boxes, we have our guidelines, trend lines, whatever, mid lines, whatever, and then we just execute as such, right? So just like we talked about, the spike up there, what to kind of play within that regard when we had that kind of, spike up here near 440, 444, whatever, right? In this case, give me 443, right? And the rest is just kind of, okay, yeah, if you can't bring it to pain, right? If you can't bring it, get ready for some puts, right? So basically get ready for your put plays. So, but anyway, so that's enough of that. So again, we got the link out there, guys. If y'all want to come on and speak about the rest of this market before we close out here, we got literally about 11 minutes before the bell rings here. If you guys do want to come onto the panel, there's the link there. We're welcome to have you here when we have these kind of discussions here. We're talking money, of course. That's what we do here for a living. We talk money, right? Because we're entrepreneurs by trade, right? By craft, by breed, by innate value, so to speak, right? Definitely come on and share your thoughts, sharing the trades that you may have on, sharing the idea, that you're, that you have, that you're using to work with here, going into this marketplace where we know that the punch bowl is getting ready to be taken away. So how many more days we got before, we know, the proverbial crowd going to hit the fan? Well, we know the month of March is what? D-Day. Like D-Day in Normandy, we do know the month of March is starting to be what? Planned for trades right now, right? People are planning for that March, that next March moment where we finna have like March Madness. Literally, we got March Madness. That's going to be a thumbnail. I'm going to have to use that, right? March Madness is upon us because we know that's D-Day when they're going to have to finally do what? Lift off, start raise the rate. Now, we know it's going to be a quarter basis point. We know Wall Street thinking they might do 50 basis point. However, whatever, he didn't really talk about that today in detail because he knew if he said that outright, that throws a bigger monkey wrench or a lifeline to Wall Street. And he could not give them that level of justice thus far because he know that people's watch him, meaning the government, the people who employ him at this point, the Democrats at this point. He know that these guys are watching. Why? Because inflation is kicking Joe Biden in the teeth, right? He can't afford to go into the midterms with that kind of level of pressure on over his head, even though he already got the lowest approval ratings right now than any president at this point. God, even lower than Trump. That's sad. And we're not going to talk about Kamala Harris. She just, I don't know, is she the vice president or is she just a, high-paid secretary? Again, shots fired. Don't y'all come for me if you're a Kamala Harris fan. I'm just speaking how I feel about it because I don't do politics like that. I've been, through that much, through that in the trash. But anyway, so that's what we're looking like here again. So on the back end here, we got stocks are still kind of showing weakness here again. Let me do this here. Matter of fact, let me do a bigger screenshot of all the stocks that I still have up on my screen, of course, that I'm watching. For the most part, let's do a bigger window screen share. But yeah, again, we we waited for this moment, right? We were waiting, we were saving that bacon. We were saving that bacon. Right? We were saving that bacon. So of course, Tesla again got earnings tonight. Again, it dropped, literally 80 points. It was up here in the 90. Literally, we almost hit 990, and we dropped all the way down to 900. Like you couldn't make this stuff up. Like that was almost like a 90-point drop just on this the news today. See, that's the kind of volatility we're talking about. 90 points, right? So I sold the rest of mine up around this point here, right? I had some scalp calls coming in today and scalp one during the intraday, and I was able to take advantage of that from 918 all the way up to a little what the 990 on the scalp side, right? Sold out the last one around about 970s in the 970s, and then I could have definitely bought another put, but I was like, you know what? I'm not gonna do that to Tesla because I still like Tesla as a long, on the longer side of things. But it served its purpose in terms of the swing calls I had into it. I dare not hold those calls into earnings when I already made 200% on some of them. I was up on one of them really nicely, 100% plus on others. So you got to lock that profit in. We're talking $400-500 a contract on those on those swing calls, right? You got to lock that in. Discipline tells you to lock that in. No matter how you feel about it, lock that in, right? And so we'll just see what Tesla does after hours because we saw what happened with Microsoft. What did Microsoft do with earnings, right? This was like some fugazi mess. It dumped on earnings, right? They beat on top and bottom, but they barely beat. And the numbers that they beat wasn't enough to really move Wall Street the way they need to, because why? We know that the cheap money is starting to dry up, and that forward guidance is going to be a problem for a lot of these tech companies because they cannot compete with interest rates going up and everybody starting to tighten down on their luxury spending and things of that nature that they don't need. People downsizing for the winter that's to come, right? When I say the winter to come, meaning the financial winter that's getting ready to come. Why? Because interest rates are getting ready to go back up. So you can't just give these companies that leeway of saying, oh, it's Microsoft, throw them a bone, whatever. They tried. Why? Because the market was pulling back yesterday, and all of a sudden, Wall Street to say, okay, well, tell you what, the numbers wasn't that bad. Let's save the market by buying Microsoft and nothing else, because we know if Microsoft goes, so goes the market, like Apple would do it. And they bought the junk all the way back up. You couldn't make this stuff up. From 970, they ran the junk all the way back up to dang near over 300. As if materially the numbers that came out during the pre-scenario of the SEC filing was any different than the conference call that they're going to speak on, right? You can try to talk a good game, but we know that's just salesmen, right? That's the company selling, the quarter, trying to at least. And now all of a sudden, now you kind of rolling back over. So it's just a staycation. That's all. It's a staycation before the inevitable kicks in, and some of these tech stocks again began to kind of have to deal with, still being somewhat overvalued. Now, Microsoft didn't pull back a lot on its PE since then. It's still richly priced, let's be honest, but we know Wall Street again likes to play the game of what? Let's kick the can down the road as much as possible, long as possible, because there's no other alternatives out there. And by nature of pullbacks, they feel like they still got to buy the dip, right? Hate, like, love it, indifferent to it, they're gonna try to buy the dip. It's just a part of their mandate. Fund managers got to keep themselves gainfully employed, and they got to keep their their customers or clients feeling like that there's still money out there that can be made, because now we think long term, guys, long term, right? So you see this hard bounce, right? See, they all the way back to 434. They need to close the market above 430, 447. Why? Because even though the market closes green after having a spike up like that, all you did was trace the higher low that they kind of presented in the gap up. See, this is old school prop, prop search and destroy, whatever you want to call it. It's old school. This is what the market do. So guaranteed, they didn't fought back this much. This is printing money. This is a pump protection team. This is everybody trying to play the role of, let's say, the market that's killed the value from having to pay out all these put buyers that's bought this thing up here, and they just rolled it all the way down here and made all this money. Market makers hate the payout. They hate the payout. It's a mandate that the Fed then created now that they hate corrections in markets, so they feel like they're sticking it to people who are counter trend trading the market. Right, this is a way of sticking it to them, because they bought into the same Kool-Aid that the Feds was pouring out and dishing out too, that the markets could do no wrong. This is natural. Pullbacks are that's just against American religion. This is the ignorance that's around this market. That's why it's a super bubble. So you hear people like the great investor Jeremy Grantham speaking to you guys, telling y'all that this is what they call the asset bubbles of all assets, or super bubble. Y'all might want to go listen to his soundbite, right? Jeremy Grantham, right? Some of you guys know who he is. Go look him up, right? Go look for his latest press conference that he's been doing, or press releases that he put out, or interviews, and sit through it, right? Because that's old school knowledge and wisdom speaking to you exactly what these short-term hedge fund managers are not going to tell you. Why? Because they got clients that they got to keep money coming in. But listen to his latest soundbite. Maybe I may get a chance to even run it this evening when I log off and come back on. Maybe we'll do something like that, or maybe tomorrow. I don't know. But that latest interview that Jerry Grantham gave, man, it was so powerful, because it hit everything on the head. Every nail got hit on the head, logically, right? We're dealing with logic here, not euphoria, right? And but it just shows you the extent of the markets, all right? How far we've come. And again, I'm a long-term holder like everybody else. So trust me, a lot of my long-term positions, yeah, they're in pullback mode, and that's fine, right? I was taking profit on some of these stocks well into the euphoric moment. I took profit in Moderna up into the 400s. True story. I took profit in Tesla well above 1100. True story. I'm trimming some of that fat. Why? Because it's good fat that I made off of buying it at lower prices. It's okay to pay yourself too. Rebalance some of that money to better positions that are more less, looked at, right? That are sitting oversold, waiting to get their ticket points. Apparently, if they got something to offer in a value environment, move that money around to that some of those places. So I know I'll be talking to them blue in the face, but that's what we study for. That's what we play. We train for. This is what we game plan for. We think tank for moments just like this, right? So again, heck of high water, as one would say, right? Heck of high water, right? We're gonna be ready to rock and roll, one way or the other, and take advantage of some of these opportunities, right, as they present themselves, right? We're locked, loaded, we suited and booted, whatever they want to say. However. And we ready for what's to come. Why? Because we was already front running a lot of this stuff anyway, right? So just want to put that out there. So real quick. So I guess I ain't really got nothing else to add to this. If you guys want to add some more to this, Sister Monica, Oba, Chris, the floor is definitely yours. Yeah. If you guys got anything else y'all want to add, definitely, enlighten the family in that regard as well. So
I
I thought,
want to. I
okay,
just want to add how much a surgeon that Oba Willis is. Oba African Emporium is.
man,
He
I'm humble.
going in and out these trades, up, down, sideways, getting the bag, tearing these markets up,
Humble, man.
creating
I'm
a
humble.
morgue over here.
Well, and that's what we study for, and we train for in that regard. So, again, I'm humbled for the value to be able to kind of come on and help, in any way possibly can, that I can. Of course, in this regard, just trying to get, bring some clarity to this thing.
Yeah,
But
it just
part of
shows.
our
It just
mantra.
shows the precision. You know what I'm saying? When you pay attention to details, when you analyze and keep your ear to the streets, you can go in there and carve up the market, and just take your bag home day in and day out. Um, listening to these crazy guys, talking madness, but you take that information and you look at charts and you game plan, and you say it all the time. So it's just beautiful to see. People like sports. You know what I'm saying?
Yep.
MJ had the fade away. That was his patented move. You know what I'm saying? But watching you do what you do, it's a beautiful art, man.
Man, I'm
So
humbled, man. I'm humbled by that. And again, I pay it forward because I know it takes a community of think tanks, or I call it the think tank, the community that uses the power of a solid and proverbial think tank, right? Because we're game planning money. Like, how great
facts.
is that? I get to do this with the people that I respect and you guys every day. Like, who wouldn't want to be in a position where they got, that kind of environment that they can parlay in out of every day? That's what it should be about. That's just my opinion, of course.
Facts.
And that's why we love what we do, because we're in a position where we have access to what? Trillions of dollars of opportunity. Literally, that's that's the mantra every day. We wake up every day, we know over $1 trillion plus, $5 plus $6 trillion going to be moved around the market every day. We're just in there convinced, trying to tell ourselves how much of that can we get out of it, right? If not on a day-to-day basis, on a long-term perspective, 3 months, quarter, biannually, annually, it's all relevant to opportunity. Make sense?
Yep.
So I always say this: I go to war with nobody better than you guys, right? I already know what it's going to be like, because you guys are, we're moving in unison in that respect. That's why we say things like Ubuntu, right? And humbled and hungry, right? Because we know our boundaries, we know our lane, we know what we're here for, and we want to stay level-headed. We want to speak, stay, very cognizant and intelligent about the decisions we make on the executive level with money. Why? Because we realizing now the power of how, number one, the system is set up, right, to reward those who own assets, right?
Yep.
If people are still fighting and pushing back against that, they already in a losing battle. Why? Because if you don't have a heritage somewhere where people then left you a big bag, then yeah, okay, nothing wrong if you still got a job, Mr. Charlie. You feel like that's the way, the path for you to have happiness in life. So be it. We don't, we're not down that one with the other.
Right.
But when we're talking about the idea of getting ahead in life, we do know, from a disposition, you have to understand how asset ownership works, because you need something that appreciates in time without you having to sit there and micromanage it every day, right? And that's what this is offered. This is exactly what puts us in the lane to be able to do that. And they can't discriminate against us for race, color, creed, sex, gender. And none of this stuff matters here. You just got to have the brain capacity, the mental wherewithal to be able to deal with risk and understand how life is detailed by risk. Everything you do in life has a risk factor to it, right? The decisions we make, right? Yeah.
Mm-hmm.
Like how many people out there, y'all know you got to go down the road. A lot of jokers that made a lot of risky decisions, and the payoff wasn't really worth it. You know what I'm saying? It wasn't worth it. Here, these risk assessments here are every bit worth it. Why wouldn't they be? Make sense? Because if everything checks out the way that we've been planning for and working hard for, by putting together a good, a good methodology behind that assessment, we can benefit from it financially. Right. So again, some people say it's not all about the money. Of course it's not. It's about understanding how the world works too. We get a chance to get a front row seat of that. The global financial market, we get a front row seat of innovation. We see everything coming before everybody do. We get to hear about it before a lot of people even know about it.
Yep.
We're tracking this stuff in real time, like the same way as we were sitting on the board, in these companies while they delivering that kind of forward thinking guidance and R&D and what we plan to do to grow the company, innovate. And in that sense alone, that's a level of intelligent building that is just out of this world, right? So again, I say this in the most humble way, man. I'd rather go to war with no better people than you guys every day. Everybody's in the back chat who tune in and support this. Definitely you guys, you already know Sister Monica, Open Chris, and everybody in the whole game. We've been saving this bacon, right? We were saving this bacon, right? Y'all know what I'm saying? We've been saving this bacon for a long time. For years, we've been doing this.
Yeah.
Going back to the urban economic empowerment, in that beginning, the value. Sister Monica had been doing this way before I even attached, to that, to that useful band of brothers in that regard, too, in the Dagger Squad. So this is a part of our everyday reality anyway, right? Of course, you go way back over Chris in that regard. Again, I know I'm kind of going in my little, rambling mode in this regard, but it's neat to be said. This is why I take all this stuff serious. And when we come on and do the live stream, we're talking serious for that reason. We have fun in the midst of that, but we know we're very cautious in what we say, how we say it, because we know somebody out there is watching this at different stages to this. And we don't want to come on as we like a lot of them channels to be coming on just, no, this, buy this, buy. No, we don't do that ignorant over here. If you're looking for that, this is not a signal service. We teach you how to fish, right? And not wait on fish, right? And we're going to only continue to get better because we realize the power within that in terms of being able to data harvest, rightfully so, compartmentalize it, and then use it to our benefit. Right? That's what any good business owner would do, right? Variables, when they come, we audible, and we make moves. And so as I'm talking, of course, we sitting there watching Tesla. Tesla got earnings tonight. As you see what's happening right now with Tesla right now in real time. It's sputtering. So it looked like it want to go. I mean, the numbers they must be out, obviously, right? Because I think Tesla typically releases around about right around 405. So as of now, okay, you got some downside in the Tesla here again. I swung no calls in the earnings. I made all my money going in the earnings, right? Literally, I sold the last one, maybe I don't know, live it after maybe a little after 2:00, right? And so right now, Tesla just kind of doing a Microsoft as of now. We'll see if they turn it or if it kind of dumps lower. But it has to hold 900 though. It has to hold 900. So really quick, okay, there we go. We blew through 9 so far. So yeah, this is why I could not hold, and this was going to be the biggest beat for Tesla's earnings. Why? Because we knew if nothing else, there's going to beat on revenue. Why? Because their delivery numbers off the last delivery report showed that they went well and they exceeded that value of the money, right? So look at that. The EPS came in, non-GAAP EPS came in at $2.54. The consensus was $2.26. So we're talking roughly, a nice little beat there, over 30-cent beat on that, right? Because it was to be expected. Now, some people were expecting they were supposed to get up even higher, maybe even $3. This was some of the stuff that I think Loop, Gene Munster, Loop Ventures fund manager, they were saying that Tesla may even pump out a 3 handle on EPS. Of course, they didn't pump that out. So maybe that was, hey, we'll see when they dissect all this, how this works. So there you go. Now Tesla bouncing, right? So this is typically how Tesla trades, though. It's going to bounce and go through all this for a minute. It's going to go through all the convulsions and all this for a minute. So bear with it, right? But for the most part, it's better for it to be up and do all that than go down and try to do all that, right? Because who likes to play a comeback? Right. So yeah, so right now call buyers are kind of like, dang it, here we go. Right. Because now you got to bake in the broader market fear. That's exactly what's happening here. It's the broader market fear that also has even a beat on the top and bottom that will also bloodlet a stock. It'll bloodlet a stock just for the fact that even though you may beat individually, but the broader market may look like, man, this sector here is still kind of overbought. We still got to sell it off. Right. We got to take profit, one way or the other, because we need to rebalance. Because why? Margin calls. Again, that's happening right now at high levels. That's another conversation most people don't want to have, but that's reality. You got to clear up some of that all that margin debt that's sitting out there on the books. Why? Because they say, I saw a stat the other day. They said that America now has the most margin debt that it ever has had in its existence. Meaning people are so confident in markets and speculating in the market because they feel like there's nothing else out there to invest in. They went out there and took on all this margin debt just to trade the liquidity of the Federal Reserve, saying that they had everybody back. Well, now the Fed is saying, we can't have you back like that before. You got to stand on your own 2 feet. So now it becomes a game of do you overstay your welcome and you sit through the pain? Or do you realize that, okay, yeah, maybe the jig is up a little bit. Let me rebound. Let me take some profit like we designed to do. And let me just sit on my hands and be patient here. Let things let the air clear out. And then we make better decisions from there. So right now, Tesla down right now, 4% so far. So again, they beat on EPS. I got to see what the revenue is. Plans to grow manufacturing capacity as quickly as possible. Of course, we know we got some good things coming in Tesla. Of course, I'm a long-term holding Tesla. So we want to hear news on the Cybertruck on the conference call. We want to hear about the semi trucks, right? The semi trucks that they're going to deliver to Pepsi. They're going to deliver those first basically tractor-trailer trucks to Pepsi. We want to hear about Giga Austin, right? Giga Berlin, right? Those are two factors that are now still being broken in this regard. Cars are being shown around Giga Berlin that they already starting to do some manufacturing there. And we definitely want to hear about the full self-driving, right? FSD, right? Autonomous driving, right? Where we at in terms of that, because we know there's been some hit or miss with that kind of the updates with that, and that's to be expected. We know that that's a problem that's kind of still whooping Elon Musk in terms of this kind of autonomous driving, right? We definitely not going to be at FSD or FS4. We still sitting at maybe FS3. They'll tell you that we at FS4, but which is a lie, because the technology is still just not quite, it's not refined, right? Autonomous driving to that regard to have people safe, because they know people that are going to use that are going to be idiots. And we know that, right? Most people who buy a Tesla now got people who got a little money. And they're the people who making the tech look bad because they're doing idiot stuff. That because they have an entitled mindset. They're not thinking safety first. They're just trying to show off because they got money to buy a Tesla. And they out there driving without no hands, right? No hands, watching porn and playing video games while you drive. Like dumb stuff. Like we ain't the Jetsons yet, bro. Like, so they're making the data look bad for Tesla. And that's what's kicking Elon in the teeth at night, because he know these people are not adding value to the data, right? But that's how this stuff works. That's why they say sometimes you got to be kind of give it time to work itself up before you jump out the window. But nonetheless, those are things that I'll be looking forward to hearing on the conference call, me personally. This moving Tesla here after hours is down, of course, roughly around near 3%, something. Again, the broader market is still kind of shaking, scary. We've seen these things happen a lot, and we see the next day Tesla be all the way back up, up near 1,000, right? But that's why I say right now, me personally, I was like, I could not hold this in the earnings, because I did the smart thing. I knew this was going to be a scenario where we're going to have this kind of ambiguity. We down near 5%, actually, somewhere around there, give or take, right? Well, now about 4%, somewhere around 3-4%. But I just knew this was just too volatile to deal with that, right? So I made my money into earnings. I bought last week a lot of swing calls into this week, playing that kind of move into earnings, right? And so it's strategic, right? It's strategic for that reason, and we clean the clock on Tesla in that regard. Now I'll just sit back and let it do what it's gonna do. All right, I get a chance to do a little dip by scalp on it at some point when all the dust settled. If they don't turn it tonight and send it back higher, or after the conference call like Microsoft pulled yesterday, that foolishness, right? Boy, they talked a good game yesterday. Boy, Satchel Nadella to be he the new Don Juan of Chicago. Boy, that just gonna put some pimp game on the market yesterday. They turned that market around quick, didn't it?
From that Microsoft low at 269, it went up dang near
it retraced the entire move.
Dang near 40 points.
It retraced the entire move.
40 points.
It dropped from roughly over 300 plus. Of course, we saw it down to 270. So that's 30 there. And then it ran that move back up. So that's another 30 plus. So really over 60, from top to bottom. You know what I'm saying, over Chris?
Right.
That's a big move. What you about to say, Sister Monica? I know you're trying to chime in. I'm sorry.
No, I thought that was the SPY, but that's Tesla. I was like, wait a minute, what just happened to the price?
Oh, that was boy. If that was SPY, you might be back flipping over here. I'd have had to pause the call. Hold up, breaking news. Pull a breaking news, but SPY probably coming down because Tesla is also weighted in the SPY too, right? Like I did with Microsoft, right? Now it's not weighted as much as Microsoft in the SPY in terms of SPY value in the tech. XLK, that is, but it still has some value in the market, right? In terms of the broader market, the S&P 500, that is. So really quick, let's go look at that really quick, just see what the SPY doing. And it's probably slow dripping at this point. It's insult to injury. They don't want to just kind of crash down, right? They got to make it look like hey, we still trying to protect your 401k, all that stuff. Like, yeah, okay. So see, you got a little small. See, I just popping right there. Now, if that was Microsoft, straight down like it was yesterday, like we saw it did yesterday, it'll be like coming down a little harder, right? So we get it. Give it some time though. Throughout the rest of the night, we'll see how this thing pop and ping around, It's trying to factor in a few other stocks that had earnings tonight too, but we know the market's in trouble. So the worst thing they can do is, play a red futures tonight, but not necessarily bring it down too hard, and then do the move where we say, we get oversold throughout the day. Off yesterday's closing price 434, so we have a reason to try to gap it up the next day, meaning Thursday, and try to play another game of the lower high game, right? And see if Wall Street can go home tonight, lick their wounds, digest what the Fed said, make an excuse to why they need to still be overly bullish about the market, even though we know that's not the thesis any longer. But every little bit helps to kind of pad the pain, right? It's just about slowing the bleed, right? It's like you military mind, so Monica, you already know, right? You got level 1 leak, level 2 leak, and a level 3 leak, right? You got a level 3 leak, boy. Somebody come and see you in the motor pool, like, no, y'all need to come fix this here, right? You leaking all across my car, my motor pool. But this is that reality. So they're assessing the bloodletting in terms of how much they want to let it kind of leak, right? And it's good, right? It's good. We just know how to play both sides, like we've been trained to. We'll see how the chips fall, right? We'll see exactly how the chips fall. So right now, again, again, the SPY just kind of doing this. So we'll trickle down a little bit. We'll try to, save face, and that's fine. And that's fine. So let's get back over to Tesla real quick. But that's what makes this stuff. It makes it great. It's about risk assessment. So we're teetering here now. So 900 obviously is definitely resistance for Tesla here. It's pinging up at it, back and forth at it. So if the bull's gonna turn it, they're gonna have to get the thing back above 900. Again, we know $50 and whole dollar mark are natural support resistance points for a reason. That's why we stress that half and whole dollar marks are psychological points and pivot points that people obviously operate at because they just used to having, not having to deal with all that kind of loose change mentality, right? Loose change math, right? Right. So as of now, you see it's trying to battle back, right? It's trying to battle back. Again, the revenue, we knew we definitely knew the revenue was going to be. Again, they were trying to say that Tesla could come out as high as maybe over $3 on the EPS. Well, they definitely didn't do that, right? They only came in at 254, and the consensus was $2.26. Still a beat, but we saw that last night with Microsoft. It was still a beat, but it wasn't a beat that they was really wanting. And they still end up throwing them an olive branch, extending the olive branch to them after hours to save the broader market. That's why that, turned, meaning, Microsoft turned on the back end of the day. They just need to try to save the market. They will do that. They will reward their, what they call some of the top sheep in the flock, and that's what it was. So they see not just on down, so we'll see what comes from that. But as of now, on Microsoft. Yeah, well, I did too. Remember, like I said, I definitely took an L on that. And rightly so, we was in the right place at the right time. It's just sometimes you can't account for the anomaly of markets trying to be it will do its thing, right? So I'm not gonna say it's market manipulation. I'm not gonna say all that. I'm gonna call it what it is. That's just how markets work. It's trying to survive, and we know it's illogical. We know it's retarded, but that's how markets operate, right? In that regard, so we know to understand the risk within that regard. That markets are delusional, right? And it's irrational, and it'll do whatever it can to try to save face. Why? Because it's trying to look good in front of its European, allies. It's trying to look good in front of China. It's trying to show that if nothing else, we strong, right? Which is dumb because again, they're trying to make the barometer of our existence is based upon our stock market. We know it's supposed to be Main Street, but everybody knows at this point. The smart people know that they judge your economy by your stock market value. Because all things that's tied into your GDP is based upon the value of your innovation, the companies that make up the ability to procure income for your economy. The lie told to the layman is that it's Main Street that makes up the labor force, right? The labor pool. Well, how many people have been employed ever since COVID? Like nobody really, right?
Right.
Well, how the stock market will up through the roof?
Through the roof.
Like make that make sense to me. Like how you can't have it both ways, right? You can't. So we understand what's going on here, right? Of course we do, because we study this stuff, right? We take this up as this is like science. This is what they call money science, right? They call it, this is the science of understanding how money works and money moves, right? They need to make that another course at the collegiate level, because it's funny watching how these people who are in positions in the institutions, how they're sitting there just playing the system to their benefit. Of course, We sat there and watched Nancy Pelosi literally day trade the entire market, doing all that policy making that they was making from the Democrat and Republican side, and made millions of dollars right in people's face while they was hurting. Other members of Congress doing the same thing. We saw people in the Federal Reserve of all people, the most neutral supposed to be neutral institution we have in this country. That's not even really a part of the government. It's an annex. It's a private organization that's entrusted with your money, and they sat there insider traded your tax dollars for their financial gain, and nobody got in trouble for it. They got a chance to retire with a golden parachute and walk out the back door as if nothing happened. You would never have gotten that opportunity, not even the inkling of idea to think you would have pulled something off like that. See, it's that part. And everybody hush about it. They rarely want to kind of, see, this is what I talk about. So when people always make that assessment, like, don't bet against America, like, seriously? Like, that's the dumbest thing ever. Like, America betting against you every single day. Every single day is betting against you, and they try to play on your heartstring to get you to fall into that, but it's better than being, in so-and-so right now. It's better than what they got over there. See, this is the dumbest when people try to make that comparative contrast value. It makes no sense to me, but that's just where I come from. I'm speaking for myself when I say that, of course. But it makes no sense to me because it's not rooted in logic, right? It's not rooted in the reality of how we know money really works and how politics dictate how a lot of these things are, right? These people that are struggling, a lot of it's because of sanctions, they're just being exploited. If it was really a fair game, who would be hurting? The West? Definitely Europe, right? Because they ain't producing them. What's America producing? Y'all live here. What we producing here? Stop playing. Don't tell me soybeans and soybeans only, right? Don't tell me your little high fructose corn, that cheap feeder corn they give the pigs and cows. They turn out, put in the cans and feed it to you. All right. Anyway, Powder Spring Road, if y'all know what I'm talking about. Where my Washington, D.C. people at. Go to Powder Spring Road, FDA down there. I travel there. USDA, all that stuff down there. You see, all right. Anyway, it's funny and comical, but this is why we take this stuff serious, because we want to be smart. That's all I'm saying. I guess we want to learn everything we can, even though we late, but we still on time. Right. So what are you thinking right now, Sister Monica? I mean, we already know we're coming up on tax season. You're seeing this stuff in real time. The government grants things are still moving around. What do you see out there on that front that's interesting? If you want to share anything with the family.
I'm sorry.
That's okay.
I don't. You know what? The only thing that's, even after watching our governor speak on the other night, is infrastructure stuff. So basically, highways, stuff that they're doing with the restructuring the highways and things. I haven't seen any other funding come out other than infrastructure stuff. Yeah. I'm sorry.
Oh, you're fine.
I got distracted.
You
Yeah.
work more. Good.
Yeah. So the I was trying to think for a second. Yeah. So I was like a lot of transportational stuff. Even though like people think that the transportation, with everything being held up at borders and things of that nature, the transportation side, they're still pumping money into that, but not from importing in, but within basically just what they're doing in reference to fixing roads and stuff. I haven't seen any other money. Oh, tourism. There's a lot of money out there in tourism. Basically what I see in that is that they're trying to put money, kind of make it look like they are preserving historical areas. And so they pushed out billions from the feds down to the states in tourism money and infrastructure. That's it. There's nothing else. Oh, now they did bury money for trades in the infrastructure money, but you have to read it to know it that is
what
there.
That means.
Yeah. So there's a lot of funding if you're someone out there and you're looking to retrain, get a whole new profession in these small certification fields like phlebotomy, CNA, truck driving, pharmacy tech, all of those type of fields, there's a lot of funding there, but it's buried into the infrastructure side. So if you didn't know no better, our tech schools are winning because they're pushing out a lot of numbers and people skilling, so to speak, getting a new trade.
Retool, yep.
Retooling, yeah.
Mm-hmm.
To get a new trade, because those fields are making the funding. And then if you get into like traveling nurse, traveling CNAs, traveling for the phlebotomists, those fields, they're making a lot of money. But as far as like, I'm a lot of people's been asking in reference to the contract world, but they've revamped systems and things. It's like they hide. It's like they hiding the contracts. You can't even get the darn information. You know, the way we used to be able to get it. You
Yeah,
have
well, you know, that's a big hustle, the contract game.
Yeah,
When we did that expose we did about a year and a half ago, when they were doing those contracts for Native American, and we saw those white contractors
LGBT
putting down at 5. It was like, I was like, these people got the game locked.
Native
Boy, you talking about America?
Yes.
And everybody running around trying to play this old moral high road. No, that's not right. These people out here trying to get that money because they ain't playing by the rules that everybody think that how the system really works.
They hide. Listen, I mean, they hiding it so much. So they push down like some after the SBA money, they pushed some money through the states, like COVID money type. But then it was like 15,000. Like, really? Like, you're gonna spread that little couple $1 billion around 15,000 and make some people think you did something? That's just enough to pay the darn payroll taxes, and that may not even be enough. But there's not a lot of it's in to me. Okay, so like when Governor McMaster was speaking, and he spoke about the cleaning the environmental, but the from the cleaning side, like the logistics side, being able to preserve that whole area, right? But he named a specific company, so they already have their people picked on where this money is going. These company, and it was like this about 6, it may be about 2 females and like 4 or 5 of the others, right? And I was like, wow, how can anybody get on those contracts? You're talking about the funding is available, but you already got the primary contractors picked. And then
quid pro quo.
Yes.
Wash your hands out, wash.
Yes. And he says, well, we have if you are certified, in the DBs and things of that nature, that's only 30% of that contract. It's not even a lot where that's coming from. But yeah, if you haven't dump trucks, those kind of things, those big heavy equipment type companies, then there's hardly anything. Like, you got to go and really kind of market yourself. Like, we've gotten into the electrostatic spraying, right, for COVID, and kind of just getting that boots on the ground and market it in order to get contractual services working out really well. But they're hiding the information, brother AE. I mean, you really have to. And then our agencies like the Commission of Minority Affairs and the African American Chamber of Commerce, they so on the shop bus, like they should be advocating, making sure that you get a window with what's going on or what's out there, but they don't even know how to get it. So you kind of like on your own. But I mean, we're still hanging in there because, of course, being a veteran, we kind of got a good play. But for everyone else out there, man, if I could kind of get a hand, maybe that's what I'll do this evening, is go through the new system, because it is a new system on how to look for contracts. It's definitely a new system. You definitely have to know your NAICS codes. If you know your NAICS codes, you kind of maneuver around it a little better. Oh, now one thing that I did see, January 30th, 2022, the federal already changed their minimum wage to $15.
So they already updated.
Yeah,
right.
It's already
and they
updated.
probably did it. I think maybe the same. Well, because DOD, when they get that raise,
right,
it kind of go hand in hand with that. Because
right,
definitely
so
about that coming through.
Yeah, so it's effective for them. If your contract is between January 2015 and January 15, 2020, and it's not going to be renewed, your minimum wage is $11.75. So that moved from $10.80 to $11.75, just to kind of give them a little bump if their contract is not going to be renewed or extended. And then if you are going to be extended or renewed, then you have to push over to the $15 mark after January 30th, 2020. Which means if that line item or that occupation title is paying less. So case in point, we had 2 locations where the occupation title is like $13.32. Another one is like less than $15. So we have to make a decision to either they're going to go to the $15 mark, or the contractor is going to change that dollar amount. So probably shortly after, DOL is going to be increasing the occupational title rates as well, because we have a lot of job titles that are under $15 a lot. So at that point, if you are in contracts, it's not a loss, because most people probably think, oh man, they raised rate, but I'm stuck in a contract that was based on that old rate. Well, you just do an economic adjustment with your contracting officer, and they'll give you the money back. But you have to be right. You have to be within that window. So please, if y'all do have contracts out there, make sure you're talking with your contracting officers, because if you miss that window of opportunity to raise them rates, you sure gonna get stuck. You're gonna get stuck. So I think it's like within 30 to 60 days, you have to notify them and then put in your adjustment and all that great stuff. But yeah, we on top of ours right now. That's what I was doing today, changing rates to make sure that we can get our money back. Because if you change the rate before they decide they're gonna give you the money back, they're not gonna reimburse you. So that's the other little game that's out there. I'll probably talk about some of that this evening and look to see what other funding is out there. But so far, it's just infrastructure money, and then the dislocated worker money is hitting in the infrastructure money. And I mean, even COVID dollars is, far and few in between. SBA still working on those who got their applications in by the 30th. They still trying to work with people with the EIDL. They're still working.
It's still money sitting in that little trough ain't ain't going down range.
Right, because what they
America
did.
moves slow, boy.
Yeah, because what they did. A lot of people open up those payroll accounts, withholding accounts, right, to justify that they had those employees. But what they forgot to do after that money ran out, second quarter, third quarter, what they forgot to do was go and file 0 withholding returns. So the DOR put out penalty letters and made it look like they have debt on the book. So the SBA partnered with the states. They got this little company they go by, and they put you on the no pay fraud list, as if you have a debt. So basically saying that when you fill out your application, you say you had no debt, no liability on the books, but when they ran your name and you owe Department of Revenue for the state, you do have a debt liability. So it makes it look like fraud. Yeah. So
about like how student loan was hitting people across the head for you pay with that little small gap in between. They know they're gonna have that moratorium, and they still tried to make these people see. Oh, they fraud. We just always have with Navient. Look what happened with Navient. They made people hooking booking, man.
Yes, very underground. Grants. It's just one of the things where you still don't get discouraged. Kind of keep your paperwork in order.
Yeah.
Because of course they're gonna have to open something up. They ain't gonna be able to keep it all tucked away. But you got to be ready when they do. Because if you're not ready, you're gonna get passed by the wayside. So right now they're trying to ramp up right now with the whole minority thing, DBE thing, because they know they gave a lot of the contractors to those primes who weren't, but all the money can't fall under that umbrella. So right now they're putting out saying, okay, you got to have your certifications, but guess what's going to happen? They're going to say, oh, well, we find a lot of contractors, they're qualified. I mean, they're eligible, but they're not qualified.
But not qualified.
Yeah. So that's
red tape and jokers.
But on the just to play a little devil's advocate to that, it's nothing new. It's the same rodeo. We have to, those people who decide to stay in the contract game, they should know. If you don't do anything else, you need to have an accountant on the team. You need to have a legal person on the team, right? So you could make sure that them books, because that's what's actually making and breaking our folks. A simple P&L statement, balance sheet, and income
Paperwork.
statement. Yeah, that's it. You could do, and there's so many apps out there, that you can kind of do
QuickBooks.
this stuff. Yeah, right. Do
My
that stuff yourself.
econ.
My econ, yeah. Do that stuff yourself. But everybody's getting caught up with making the money and they're not really paying attention to how to sustain it. And so if they can kind of get that down pat, we can kind of win. But as far as what the feds is pushing out of pipeline, it's only infrastructure type stuff. I mean, we're getting some headway through working with. I will tell anybody, man, rub elbows with your elected officials. I know you guys don't like them, but
No, we understand leverage.
they writing them tickets.
But they say personal business is two different things, right?
Yes.
You play ball under the rules of engagement. You don't have to get caught up in personal operations. That's exactly why we had these conversations on this channel, because we trying to get people to understand how this stuff works, right?
Yes.
Don't let what they call your these implicit biases remove you away from opportunity, right? That's important. That's why I always stress that. Do not allow implicit bias to remove you off from opportunity and get sound logic and being able to execute. Why? Because this is a game of, again, leverage. It supersedes race, color, creed, sex, gender, rotation, even though we know a lot of those boundaries are out there too in some ways. However, but things that you can't control, that you can maneuver around, you do what you need to do to make sure you get your portion, your piece. They're gonna throw that stuff out, again, just willy-nilly, but definitely always gonna look through the good old boy system first, and then what's left off, they'll flick a crumb. But it's all strategic. It's about leveraging, all right? It's definitely about leverage.
Yes, because if you don't, they will, and we can't get upset. And also, if we keep allowing them to come in our community with these programs, stuff that we can actually do on our own, they're gonna take that too. All your numbers, all
affirmative action.
If
that wasn't a slap in the face.
We're certified. Whatever the guy name is, we so certified. We too certified. We getting ours. I'm just speaking to the point of individuals, out in the community that actually have the companies and kind of stay away from the paperwork side of the government side because of the books, not having their record keeping in order, that kind of thing. But if we could just tip the surface of what some of our the other side of the tracks is doing out there, we would be winning. But in the same sense, though, they'll lobby and stay in the pockets, whereas we just wait to see if they're gonna offer us something. And we have to be intentional. How you say that word? We have to be intentional about going after what we want. See, I played the stream because the Representative Johnson, Jermaine, was in the
Dr. Johnson.
Right
I'm gonna call him by his credential. Dr. Johnson, young man, younger than me, because he's my junior, but Dr. Johnson, he definitely for the people,
Yep, Dr. Johnson was right in the front. You couldn't miss him. Tall as all get out. Yeah, he's doing a good job. He's doing a good job of trying to help us. We're not trying. He's actually starting a solar panel farm in Lower Richland.
Smart man. He going right to innovation. That's we talking about them decade. Again, that's where the money's coming. Infrastructure bill already in play.
Oh groundbreaking. He's already breaking ground and everything. He had his press conference and everything. I would have went live, but I was sick that day when they did it. But he's doing a pretty good job bringing jobs in that area and knowing what to actually leverage. Yeah.
Definitely shout out to over Dr. Johnson in that regard. Again, moving as they follow the money. That's what industry is leading people. It's just smart. It's getting ahead of a lot of people who yet to get in those areas, especially a lot of the Lower Richland area. We got these people kind of, we're not gonna call them, what they call how can I phrase it? They're
Well,
like, tech indigent, so to speak, right?
right,
Because they just
right.
used to kind of living, comfortable in the base of what they are.
Mm-hmm.
But that aspect of evolution, but then having people bring in the solar phones, you got all that, man. You got unlimited sun down in the low country anyway,
Yep.
unlimited sunlight.
Yep.
That's the only
Yep.
thing that's needed as another source value of energy.
Right.
It's like next level stuff. Like people need to be procuring
Yep.
contracts right now to outfit those, because they got
Oh yeah.
buku money for people that want to do stuff like that.
Oh
I
yeah.
mean, that's the Al Gore initiative going way back. Right? They got buku money to put out solar farms, because that's a win-win, right? For the city, for the state, county municipalities. Again, they can fight over land grants and all that stupid stuff, OSHA, whatever. But this is still it's a win-win at the end of the day, because you got
Yep.
ample land down there. They can put those things out there and
Yep.
benefit from it. But
Yep. And
he's smart. He moving
oh
smart.
yeah. And shout out to Westinghouse. They are really helping with grant funding into the community, helping grassroots organization, giving out sponsorship money to support. We have a sister, a veteran, who's lives on that area, man. She opened them gates wide open, and I walked in them.
Okay.
Yes.
You say what do we say? Stay ready,
So
right?
you don't have to get ready. What?
People think we just be saying that because it sounds good. Oh, that's reality, and it's reality. Opportunity ain't gonna sit around waiting on you to flick your thumbs and mess off and struggle. Look, you got to be better to move, right? Opportunity is poised for those who ready to make moves.
Like you said, if you're not gonna get involved with the market, then you got to get into some type of contractual services, whether it's government or private. So that steady income can roll, and the rest is just you putting forth quality work.
Mm-hmm.
Keeping your credit good. Getting make sure you treat your employees right, reward them, so you can definitely continue to do what you do out in the field. Yeah. Yeah.
So true. So again, a lot of interesting things coming down, because again, we still at the beginning of the year. We still in January. It don't seem like, it feel like it's already ain't in March,
right?
With all the fireworks, because especially as an investor, because again, we take a lot of the weight of what's going on literally globally, because again, it's effective for us market wise, and it's feel like, man, like 2-3 days in the market feel like a month worth of data.
I know.
Like, literally, you could make this stuff up. I'm serious when I said I'm not even being facetious in that, or just kind of, it's crazy. But again, this is the part of the game that we all signed up for. We want to be more knowledgeable for a change and not be playing the game of simple ignorance. Like, it's important, right? It's important, right? Because again, these are, it's moments where again you can leverage it. It's all about leveraging, right? Leveraging information in this regard. It's great. It's at least nothing else. You know how to better run your household when you feel like you kind of know what's going on, right? You're not just waiting on somebody to tell you when and how you can and when you shouldn't. No. Be the own king, queen of your castle, like I like to say a lot. I've been saying, because you need to understand how this stuff works, man. It's not going to stop. It's not going to wait on you to catch up. That's not how this stuff works. They're not going to wait on you to get educated, right? That autodidact value within you has to wake up at some point, because again, time wasted is money lost. Essentially, time wasted is money lost, and you can't get that time back. So you might as well start figuring out how to protect it while you can now. Make your moments count, as they say, right? One shot, one kill, so to speak. Because again, the system is figuring out how to punish those who are playing in the rain and acting like it, the storm ain't coming, and those who are in there making the right decisions early in advance, so to speak, right? It's not going to wait on you, because the separation is starting to happen. People know that now. Again, those who got and those who don't, it's time for to start realizing that, right? And start getting our game around, start realizing how the system works, essentially, right? How it works, right? So shout out to Sister Monica again, always coming in and blessing us with a lot of this. She is she's what they say, what they call the oracle. She's the oracle of financial, all things business management, right? So we appreciate her, guys. Subscribe to her YouTube channel. We like to always support those who support us. She does have a YouTube channel called Monica Lamb. Go subscribe to her YouTube channel, guys. Seriously, we need to support people who are really putting in work, unselfishly, unflinching, again, in a way where you guys know you would not be getting this information just on average, because a lot of people out there are not willing to want, again, be that community pillar in a lot of ways, because again, they just worry about their own situation. So she's unselfish in that regard. So that's why we say we want to support those who support us. So go subscribe to her YouTube channel, Sister Monica Lamb, right? Monica Lamb, verbatim. And definitely help her, grow this scenario so she can continue to, so she can benefit from it in more ways than just, being in front of our little audience. She can expand and gain more traction and helping a lot of other people as well. Right. So we're excited for her. And also Oba Chris, right? Oba Chris got a YouTube channel, right? Chris Lodge, you guys already know this stuff. Go subscribe to his YouTube channel. Again, that same reality. Y'all know these people. Y'all see them every day. Y'all see the work they put in. You see their sacrifices within this regard as well. So again, we want to support those who support us in that regard, right? Because again, we don't have no respect to person in that regard. If you're putting out quality information that's usable, actionable, then why wouldn't we want to be, be in those circles? That's how I think, of course. That's just me, maybe, but it just makes sense. It's logical, right? People helping you make, good decisions with your scenario. No brainer, right? It's no brainer to me. It is, right? So I love it, right? So as we watch here, they go Tesla starting to make that move. Like I said, this is the part of Tesla where it's crazy. What's going on, Oba Sunny? Oba Sunny that popped up in the building. Shout out to Oba Sunny popping in the building. What's going on? Rams in the house. Rams then popped in. King Rams in the building, right? Seeing people on the backside of YouTube here starting, infiltrating in a little bit here. How you guys doing this evening? And again, Tesla's making this hard balance here. Again, we're definitely here, kind of trying to get back to the point where we kind of close out a little bit around about what I want to say roughly around about what 934, 935, whatever. And now Tesla's making that move. So this is typical how Tesla moves, right? When people start really digesting all the moves again, like Microsoft, but Microsoft's scenario is not like Tesla because we knew Tesla had more of a open book in terms of what their numbers are going to be based upon it's a binary value, whether they selling cars or they're not, right? We know they hit a lot of their targets and their goals. We was all expecting them. And so this is that, that kind of, back in, let's digest the news. We know the broader market is ugly right now, but, this company still has a lot to offer, right? Even at a high valuation, this, that, the third, we'll let them sort that out, right? For us, it is what it is, right? It's just a moment where the market is trying to still, prove that there's still, some good forward-thinking company scenarios out there, even though they might be overvalued, because Tesla is definitely overvalued. Tesla is overvalued. But again, most people don't complain when they're making money, but you need to always be what? Be living in reality and knowing that your company is what? It's frothy, right? It is definitely frothy. It's overbought. It's saturated in, a lot of euphoric people that bought it for all kind of odd reasons. And yeah, a good discount would never, it won't be a bad thing if it happens. My point, right? It's definitely frothy. Right? Tesla is like the most frothy company out there. Of course, obviously, you got the PE dang there over what 300 dang there, right? So all this after hour stuff is just them dieharders, right? Just, Tesla obviously got a fan club, right? They call it the the Elon, the fan club, the Musk fan club, whatever they want to call it. They out there, right? They feel like Tesla could do no wrong, right? That idiotic way of looking at things, right? Like, nah, it's overbought. Brother David say what? They overvalued, way overvalued, right? The hype is definitely there. You're 100% right. So much so, again, that's why I sold my calls before earnings, because I didn't want to deal with this. I made my money into earnings. Along the way into earnings, smart, clocked in well over what? I think over the 4 options. Sure, I know I cleared well over. It got to be a little bit near 3,000, right? The puts paid, and then all the calls that swung, they obviously paid, right? So close to about 3,000 on the week just in Tesla alone, right? Because they were just paying it. But I guess maybe it was around about a little 2,400, so somewhere around 2,400, 2,500, right? Give or take, right? But very strategic trades is my point. We put those trades on in a strategic manner for the very reason that we're just trying to play the volatility into it, because we know we're dealing with all this Fed, the Fed fog that was hanging over markets. They had all the tech stocks scared. Juggle shaking in their boots after they watched what happened to Netflix. Boy, Juggle like, bro, I don't want that to happen. So a lot of people just they were doing what they can to kind of make sense of the market under a lot of that risk, but nonetheless, we did well with our, our trading, aspect of being able to trade Tesla properly. All right, so there you go. Now you're back above the VWAP. You're above, pretty much, the close of the day, and it's starting to march up. So again, Tesla could definitely get going. I'm pretty sure the conference call must be going down right now. I think they had it at 4:30. It could be at 5. I think it's at 4:30. So they might be liking what Elon talk about right now. So I'll come back and I'll replay it later. I was going to do it live, but this is most important what we're talking about right now. We know how Tesla work, right? In this regard. So whatever. But if you guys, are, those who like Tesla for what it is, you want to go check out the conference call, definitely go look it up. I'm pretty sure it's live right now. And those things that I spoke about earlier that I want to hear Elon talk about, I could listen to them on replay. The reality of that, because I don't have any kind of what they call short-term skin in the game in terms of an option play in the earnings on Tesla. So it's not dire for me just to hear that out right now, right? Because either way, the market gonna do what it's gonna do. I already made that money. We locked that in. Right, so shout out to Tesla. All right. So that's about all I got, guys. And again, if you guys got anything else y'all want to add to the bill, this was then another high fly, interesting moment, right? Watching the feds get out there and tap dance. I'm just sure had them tap dance shoes on today. Right? He was tight roping them questions about just was sweating, but I know that shirt was. But on his Under Armour, his shirt was definitely sweated, boy. That just couldn't wait to go get that coat.
What stocks is he traded in? Because he don't be caring about.
He got long-term bonds out there, like I say, he was a trader when he came in, so that's how he was able to benefit. He benefited most because he was in what? A lot of the bonds. When he was buying bonds, this is how to save the market. It couldn't make this stuff up. He was the biggest. Oh my goodness. We need to do an expose on that one day, maybe. I need to break that down and show you what his bond portfolio looked like. It was through the roof. See, he was in there clocking up all that money. Right. And the other ones, they was out there just trading stocks and just doing crazy stuff. They were just willy-nilly and just stealing. They were just stealing in plain sight inside of trading like none of them. This is crazy. These people here done lost their mind. All right, but again, we understand how America works. America is look, but people better understand how this stuff works and stop trying to get, whatever, get out of all that delusion of grandeur, thinking that, the country is this and it's that, and they wouldn't do that. They wouldn't do that. When people say something like that, I'd be like, oof, boy, you got a lot to learn. How old are you? How old are you again? How long you been?
Disconnected.
Here. Yeah, but that joker right there, boy, he didn't, boy. The dealer, boy, that's definitely the dealer. He definitely the dealer. There's nothing. Boy, the blackjack table or the poker table, wherever you want. So we ready to deal with it now because we understand a little bit more better how, to definitely gauge these jokers and how to measure them, and the policies and so forth. So they can cook the books all they want. Don't harm no foul for us because we ready. Right, they can cook all they want, boy. They be in the kitchen slinging them, slinging that pretty. We ready for them, one way or the other, right? We ready for them. So shout out to everybody. So I guess that's all I got, guys. Unless y'all got anything on the way out the back end. This was another eventful moment, in the Federal Reserve, exposing themselves, so to speak. Right? Yep. Nothing that we wasn't ready for. All right, so y'all got anything y'all want to close out with? Anything? I know a lot of bulls right now, probably a little shaking in their boots right now. Some jokers on psych value tonight, boy. They was like, woo, boy. Merc my little call by. I just knew we were finna go to 450. Woo, boy. Joker right now, hurting right now, probably.
Triple D, due diligence and discipline.
Okay. All day, every day. All right. We be chilling tomorrow. Right? All the money we done made scalping the market. I'm liable to be on the couch tomorrow eating donuts, looking like they right here. I'm gonna do me some work. I'm gonna work out tomorrow. God. Work them donuts. All right. Cut up a little bit. That's it. But y'all got anything else, guys? When we get out of here? Get out of here
for me.
Right, so we appreciate it, guys. And again, a lot of information. Again, Sister Monica then again closed it out the way she's supposed to, right? And just giving us that game, right? Just giving us that firsthand information, man. So again, repeat, go subscribe to her channel, man. She need to be over, man. She need to have over 100,000 subscribers. You ask me. She need to combine all the subscribers from the Dagger Squad, the Umrah Squad, and Sonic channel.
Know, right?
All that need to be on her channel.
I'm gonna start saying the aliens gave me the info.
That's right. You see what I'm saying? Facts. Right?
I gotta tap into my chakras or something. I don't know.
Yeah, because they don't want to deal with that real information, boy. They just want to get caught out there on that old other stuff. I'm like, all right, man. I don't know. They ain't ready yet, I guess.
The earth is flat.
Okay. I'm about to instantly draw about extra 10,000 to the channel, like right away.
Oh man,
right. You need to get him in the building, hit him with that. And in other news,
I know. I invite one of them crazy girls on the channel.
Yeah. they understand, man. Bring that knowledge. So we ready for it. So markets are wide open. We understand what it is, guys. You know, we pulls forward, and like always, we understand that money is made when people are afraid. When people are excited too, the same way. So we parse straws properly, and we understand that the chaos theory works both ways. The chaos theory does work both ways. We're going to benefit one way or the other first. So we'll let them again, play the games down in Washington, on 1600 Pennsylvania, all that stuff. We'll let them do all that, but we're gonna get ours, right? We're gonna get ours first, right? First and foremost, right? So that way we know, we're not depending on them to kind of, keep us in limbo like a lot of people out there now. So shout out to everybody who take this opportunity serious and who's learning it, who's earning from it, who's going to continue to grow from it. Again, stay humble, stay hungry, right? And realize that, it's for those who really, are geared to put in the work, right? Because it is chess, not checkers. Life is chess. It's not checkers, right? Life under this rulership, I should say, is definitely a chess game. You got to maneuver all this craziness. So it's okay to be smart and intelligent, and accept that as a way of growth. Right. So shout out to everybody to understand that. So with that being said, we're gonna drop some tunes, some vibes, right? We'll hear a little vibe. Hit them with some little vibes on the way out the door. That's what we say. Knowledge brings power, power brings profit, right? That's why we put education first, right? That way you don't end up being a person who's chasing your own tail, right? The proverbial dog chasing his tail, right? So it's okay to be a curious investor, but make sure you're a knowledgeable investor, right? So much so that we wrote a song about it. Like to hear it go.
I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, it's 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence to let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane, how to stay on the go. I can play with the pros and act like a rookie, so they overlook me, then I double up again under their nose. None of them cold, they just got lucky but never adapted, so I'm to the one if it's coming to blows. My enemies cutting it close, I let them think that they got me, but what do you know? I had them beat before we ever spoke, I'm ready for smoke. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, it's 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now they ain't go harder than me, they need a blade in a sheath, a shank in a piece, a crate full of heat, an army, a fleet, a tank in a jeep, a navy at sea, with ace a marine, an ace up their sleeve, a team of marines, a freak on a leash, a beast with an appetite, razor for teeth, and still they will lay at my feet. Boy, you got the wrong one. I gotta look over all of my publishing statements for Q1 as soon as the song's done. I gotta call up my mama and tell her I made it as soon as my log's done. I gotta read all my trade publications and sip my tea till it is all done. I think it's all fun. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, it's 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, it's 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, it's 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence to let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane.
The bar raising, we keep moving it up. Ain't no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. I got faith restored, why you pushing the brakes? I ain't full of myself, boy, I'm full of mistakes. I came from humble and roots, I'm here to stand and deliver. Had no one gassing me up, except the man in the mirror. I used to work on my handles and now it's handles of liquor. I write these songs in that dark room, the candle will flicker. I stay practicing heavy for when the game's on the line. It's like over and over, I run the plays in my mind. I'm a psycho, I'm taking my time. Rushing perfection is a dangerous crime. You gotta give it and take it. That's what you do till you make it. I had to roll with the punches and take the hits from the flagrants. I'm saying the bar raising, we keep moving it up. And no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. An off game don't mean I'm losing my touch. And no excuses, I ain't using a crutch. Apologies if I was doing too much, but I always came through in the clutch. I was falling, had me stalling. I was way down, now I'm balling. I done came up, and I called it. I done came in the clutch with the game on the line, I know. I operate from a higher place. Wait, some decisions don't try a race. I'm doing what I can to fuel the flame like a fireplace. To make a bunch of money, buy my mama a fireplace. We make incredible songs to celebrate and get mad lit. Once upon a time in Hollywood, I'm like Brad Pitt. My homies say I live a life, yeah, just a tad bit. Learning how to move in this rap shit. I told them that the bar raising, we keep moving it up. And no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. An off game don't mean I'm losing my touch. And no excuses, I ain't using a crutch. Apologies if I was doing too much, but I always came through in the clutch.
Yeah. Ow! Yeah. Y'all think too small, I got big dreams. You just starting, I'm way ahead at the end scenes. Started reading and dodging all of the quick schemes. Money like your Spotify, boy, I got 10 streams. And I'm still looking for more. My people, they got a soar. I'm putting that on the Lord. Ain't accepting, ignore. Just kicking down all the doors. Guarantee you, boy, if I ask for it, it's gotta be real big. I gotta make it just for my kids and for their kids' kids. That's wealth years and years. Promise my brother soon as he out and finish this bid, we finna do it bigger than anybody ever did. The odds is real big. Job that's real big. Satan trying a little, my God is real big. Stayed up on the grind and the cause is real big. I gotta do it big. The only way that I can live. And I promise I'm trying to. Before you count me out, homie, let me remind you. They was blocking the shine, now I think it's my time to. Counting them dollar signs like lights, they'll blind you. Let me rewind to back when I was broke and I couldn't acquire 2 cents. And now I got 2 rents. They was sleeping on me, homie, must have got too big. Call my phone, I be like, who this? Damn right, hell yeah, I'm brand new. Smell like can too. I'm fresh forever like canned food. Try and tell me what I can't do. I wanna see the world, my vision on shamu. That mean I got goals that's real big, foes that's real big. Y'all offer too little, sorry, my soul is real big. Coming into the ring with blows that's real big. I gotta do it big, that's the only way I can live. I gotta do it big. I gotta do it big. I gotta do it big. Gotta do it big, that's the only way to live. Gotta do it big. I gotta do it big. I gotta do it big. Gotta do it big. That's the only way to live. Come on. Yeah, come on. I learned to I can't breathe, I need to get some air, but it's a toxic addiction. You're a guilty conviction. You can't breathe and you just need some air. Give me all of your lies, 'cause you're my demon in disguise. I learned to love the cage you keep me in, but the walls keep closing in, and I don't wanna die. But your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe.
All right, guys, I got nothing else left in the tank. The rest is on you guys to go out there and make it happen. Any last choice words or knowledge that you want to share to the family? Over Marquise in the building, so you can pop in.
Yeah, peace, family, man. I just, hope y'all definitely had an exciting day in these markets, man, because it was one of them days. It was one of them days. Yeah, and I'm just,
fireworks and kitchen sinks and
I'm just, I'm just grateful to see, just all the hard work and the time that you put in, you know what I'm saying, just pay off when, you see the progress, you see things, you take that time and really map your moves out, you exercise the patience, and it just play out the exact way you mapped it. And,
Wayne had a good feeling. Boy, I tell you, juggers don't know what it's like when we.
It's
A
a
lot of
great
people do,
feeling.
but some people don't. It's like, when you, like a goal, right? You hit your goal. Like, there ain't no better feeling than that, man. Can't nobody tell you that when you working like that, because you really taking the time to map it out. So
yeah, because being being lucky is one thing, but no one, the way you succeeded was routine, and the routine is validated. Is a great feeling. That's definitely a great feeling. So I just came in just to encourage the family, just stay persistent. Just stay persistent, stay hungry, and it's definitely gonna pay off. It's definitely gonna pay off. I just keep it simple.
1,000%. You're right in exact. So again, that's why I say this is the only industry where it rewards really good good study habits, right? It's like when you study for a test in school, or you got an exam coming up or whatever, and some of it you do through cramming. Some of it is actual knowledge because you retained it. But in this case, you actually get what you're training to get approved. To know what you're talking about, you actually get the bag, right? On the end result is that you get the bag, the reward, right? It's not like you waiting to get a job after you go through the school to get the training and to get the teacher to say, yeah, you did good. Here, you make the good decision, and you skip, all the formalities of the teacher patting you on the head. You go straight to the bag.
Yeah,
you go straight to the bag. Think about that.
Your A is a pay. Your A is your pay.
You better say that right t-shirt moment, right? That's t-shirt moment, right? For the market investors out there. Your A is your pay. That's a t-shirt moment all day, every day, boy.
Tell you.
So true. So true. So we love it, man. And you're so right in that regard. And that's why, again, we take this serious, and it's not so much we just trying to see if we can do this stuff. Like some people might be trying to test drive and they ain't really quite there yet. That's fine. But I would say preserve your capital. And so, in doing so, of course, don't just jump out the window thinking you can just no instructions and no handlebars. This industry, this not how this stuff works. Save your capital for when it matters most. Get the training first, get the paper trading, figure out, what works for you in terms of finding your niche or niche in this market, in terms of under your time availability, underneath your capital availability. And then you go out there and execute. Why? Because the markets ain't going nowhere, right? They ain't going nowhere. They've been here like forever.
Yeah, just gain your confidence. I've been back in these clubhouse streets, man. Like, and it's some great people. Great people you can run into when you're networking. But at the same time, you do make yourself susceptible to other people's influences and, you know, criticisms. And, you know, I was recently with, you know, traders that, you know, I definitely respect, you know, their ability to, you know, do what they do. And, you know, I was trying to show them my perspective, and they was just like, nah, da, 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 da. And today they just, you know, oh man, yeah, you was right. We're gonna listen to you.
Well, you know, I
You
was,
know?
again, just sidebar, I was watching somebody, what was that? Somebody was speaking about, I guess, this whole, where was that? They were talking about the, I think it was like some people, they were going over the whole Tasha K and Cardi B
The lead
lawsuit
attorney,
trial stuff.
possibly.
It might have been him or it might have been Kwame them. It was one of them I was passing by now and they was talking about it, you know, because I was like, this is some old craziness. But they was talking, you know, I mean, the whole case behind that, you know, the ratchetness and them exposing each other and this, what she do and how Cardi already ratchet, like both, to my opinion. Okay, no disrespect to these women, these black, well, one of them black women, the other one don't know what she is because she like to dump on black people, but she using our culture to make money and she exploiting it. But these women, they were kind of, both of them kind of serve within that space of, you know, exploiting themselves and being a little extra. So it's like, you know, Pot can't talk about the kettle basis, that kind of whole scenario in both of them, but nonetheless, these, you know, these people were talking about the whole case behind that, you know, going after these content creators from slandering and just talking foul to people thinking they just get away with it. And they brought up the idea of how, like one guy was saying, you know, they were using those kind of scenarios now to kind of take that energy into those clubhouse forums, right? When that app was created, I'm sure it was created for networking and networking possibly only. Now it then turned into something completely ratchet for them. I've been hearing now the drama then came in, the woke culture then came in, all this other stuff, and it then alleviated a lot of the CEOs, people that was coming there to give good game, like the Elons and this, that, third. Well, they's gonna be probably on the circuit where they're only gonna allow those certain people come in them groups. But you know, like anything, people just learn how to, they just always mess up a good thing some kind of way because they get caught up in what trivial conversations and trivial things, right? They don't know how to put you know, they you know, fun side, you know, on the shelf when it's time to talk business or conduct business for what it's worth. So you know, again, it just shows. And like you said, you know, people often are hearing you out now, but they've been hearing you, but now they're starting to see that, you know, hey, this brother, you know, was speaking from a place of, you know, understanding and competency, and more so just having to come on here to say something, right? Because most of them jokers doing that, they just want to be seen. You know, I haven't even gone in there yet, but I already I get the back briefings every day when people like that. I say, yeah, I already know it's gonna be. I already know what this been. We went through that stuff through the Discord days, so we already know what it's all about, right? So ain't nothing new to us. But yeah, so you know,
again, like we got to the point now where you know we do closed rooms. We don't even open it up to the it'd be the same.
Yeah,
you know what I'm saying? A couple
imagine.
people up in there, and you know we deal with the people who, you know, energy. You know, we all got the same thing in common. You know, we're not trying to, you know what I'm saying, just find some ratchet entertainment. Now we're trying to, you know.
Time
really
is valuable, man. People ain't gonna waste
networking.
their time these days. Not in these days. You know, jokers out there really hurting out there. Jokers out there hungry. You know, and if for what it's worth, if it's made for certain or certain purpose and reason, you know, a reason behind it, you want to make sure you get the full extent of it, if you can, of course, if you're in a position to. So, again, so shout out to you, man, for always being an educator in all the ways and sharing knowledge, and you know, those who realize that, you know, this is a marathon or community university. Within that perspective, at time, it's always going to be on your side. You take the time to get, you know, knowledge first, right? You have a sanguine message to give once you have a lot of knowledge, you know. And so that's important. So I definitely always want to pay homage to that and spotlight that because it's important, right? It's what we do, right? Put the information supersedes us, you know, on a personal level, right? It has nothing to do with me. It has to do with the information because that's what we're trying to utilize to make money off of. That's why I love this stuff, because it separates ego, it separates people who just talk, it separates all that. You have to put up or shut up in this because it is a proving ground. The markets are a proving ground. Right? You can't talk your way out of this one. You can't talk your way into this one.
Work.
It's that real proof of work, right? It's about proof of stake, proof of work. Come over here and try to hustle the market. Man, they're gonna take everything you got and then some. Like Mark Douglas said, it's gonna take everything you got and then some. Right?
They want you eating oodles and noodles.
Yeah, so it's gonna be a totally different ball game in that regard. So that's why I say I respect all you guys who partake in this, because you are aliens. People ain't, man, they ain't built for this. You know, they could be if they took the time to learn it, but this right here separates really the talkers from the walkers. It does.
Yeah,
it truly does. I'm serious. I haven't no better way. I love this because that's what makes this stuff great. So appreciate that, Oba. You know,
yeah, I want to say one more thing. This funny story that happened too while I was over here, working. I actually had a contractor, one of my contractors in here. We got to put up certain, carbon monoxide smoke detectors, make sure we in compliance, and all make them all be synced together and all kind of stuff like that. So he was in here working, and I'm in here trading at the same time, and he watching me trade. And after watching me trade and seeing, how much I made in that time, he was like, well, I'm very interested in this. Maybe we can trade, some work for,
Hey, see? The power,
maybe I can, trade you some labor to teach me, how to do this here once in a while.
Man, I can count the times I've been in scenarios like that. And matter of fact, the last property we bought, knock on wood, was crazy. The last property we bought, we literally in the midst of closing and going. I think it was going through one of the inspections at the time. That's what it was. That was one of the inspections, and we did it on closing. And then the matter we going through that, dealing with their, they realtor and our realtor there, and the whole time it's going. This was doing time. Matter of fact, knock on wood, it was I was Netflix. I was hitting Netflix across the head. That same, I remember like yesterday. True story. I mean, this is premonition moment. I'm not lying when I say this, guy. And I was like, and I had made like $2,100, $2,200 small dollars on Netflix. And the guy was like, yeah, I got my long-term portfolio. I was like, yeah, my spouse, he deals in the market and this, that, and the third. And it's like, what do you see out there? And I was like, yeah, actually, that's why I'm kind of a little short, right now in terms of answering certain stuff, because I'm sitting there, I'm working right now while we also, checking this place out. It's like, yeah, Netflix is this, that, and the third. And, I was talking about the competitive landscape and this, that, the third. And this is why Netflix is going there. And they were just like sitting there like, wow, this is crazy. And you do this like on a day-to-day basis? I was like, yeah. I was like, yeah, you guys are sitting around in between property showing this, that, and third. Yeah, y'all need to be understanding how to use this to your advantage too. Right? There's REITs on there, there's real estate companies, there's Kimberly Clark, Lennar, all this stuff. This is how this stuff works. So that's like, they were just blown away. Like, these people been doing this stuff for years too, right? These realtors. And they just sat there and watched me make like $2,300 like it was nothing. Like, they're just blown away. And it's like, yeah, about this. I'll probably be giving you a call. Man, you can, you give me some tips. I can, provide the education course, and but I can't tell you what to buy, what you can't buy, legality. But that's what this is all about. So, but that's what makes this stuff great too, guys. Because again, you are in a position where you can again pay it forward. Is my point. Just by leading people properly down the right roads, right? The education of it, what it takes, to be in this. Because we do know this is the biggest wealth transfer vehicle that's out there. It just is. Unless you got inheritance, you ain't finna get it no other way faster than utilizing global markets. That's just my opinion from what I've assessed of being on this earth over 40 plus years. That's just me. Right? I've been out there, in corporate side, military side, collegiate side, hustler side, whatever you want to say. I've seen it all in my own way, in my own perspective. Man, this right here puts you in the game. If you properly poised and positioned properly, this puts you in the game. So when we tell people where we sitting around watching, you can make hundreds of $1,000s in a day, and people get the cracking smiles and smirking like, boy, he hyperbolic, he just saying anything, he lying. And then you go show them this stuff and they just blow their mind, or they still can't accept it, right? It's like, yeah, so that's why I'm in this lane. This is exactly why I'm over here in this lane, right? This is exactly why I'm in this lane. So it's great. I love it. So shout out to that, and shout out to you again for being what they call the pillar of the community, as we like to say, and helping people see that. And so I tell people, y'all be surprised who y'all bump into out in the world while y'all out there making power moves, right? Making them executive decision on the go, right? Literally, you're making an executive decision on the go through your trades and your money. And you just pop up like, yeah, obviously, give me 1 second. Oh yeah, I just closed that out. Yeah, that was a great little trade. Well, yeah, I just made like $600-700. What do you do? Yeah, I was, also investing in the markets and traded too. Really? Like, yeah, bro. That was, quick little $400-500, and it just blows the people's mind, right? It's not that you're not bragging. You're just like, hey, I'm working. You're working. And just have a result. Anyway, I know I'm around, but that's what it is. I love this stuff for that regard, right? So, and it's great because you can pay it forward. So shout out to you again, Oba Marquise, and Savvy FX, as y'all see him on the screen right here. Definitely, enjoying what Brother Marquise is doing again. Just excited for him when he get that channel popping, right? So he can definitely morph to that next level. We know what's coming because again, we are building that community university or that Voltron or whatever you want. The Avengers, all of us, right? We all us, kind of giving that same likeness. So we definitely appreciate the family and what they bring to the table. So shout out to you, Oba Marquise. Thank you again always for the words of wisdom and what you do in supporting, and we support you in the same likeness too. Right. So
appreciate it.
we
Likewise,
enjoy it.
you know, and the fam.
We appreciate it. So that's it. So I'm gonna get out of here, guys. Oba Chris, you got any last words? I got me a little hot little break. I'm gonna eat my little late lunch. I ain't even ate lunch, but I'm still running on water fume. Man can't live off water long. I'm gonna go eat some.
Ooh, look at that.
I think Sister Monica, she got the live coming up next. She typically do it at 6. I think she got some time. She might pop it off actually today at 6 p.m. Right, Urban Empowerment Show that is. Yeah. You guys all around. Make sure y'all tune into that. Get on the panel with that too if y'all can. So I'm gonna go eat real quick before she pop that off. Any last words over, Chris, before we close out?
Just get invested. Literally, get invested.
Like that. That's it. I mean, straight to the point. That's just the reality. You got to learn how to make something work for you, right? In this case, put your money to work for you, right? And
what was the $5 a day challenge?
Man, that $5 a day challenge. It's still the month of January. I still tell y'all, it's still early, guys. Get it popping, right? Learn how to principle-based invest, right? It'll help you learn how to what? Interest-based invest at some point. It's just teaching you discipline. Right? It's an escrow. You paying yourself off the top first. And if it's only $5, that $5 goes a long way when you put 365 days behind it. Let that marinate. Dang. And if you got a spouse, that's a double up. And if you got kids, you get them involved, you throw their little $2 in it. That's another little extra, right? That's the plus tax. See, like that. It's that kind of thinking. Right. So happy you brought that up. We need to revise that conversation to keep it popping since it's still early in the year. Put away $5 a day. Put that $5 into a shoebox every day. Watch it grow out the entire 365, right? Get used to that discipline, what it takes to put money away and feel like you don't have to blow it every day at the KFC or the local Taco Bell or the 7-Eleven. No, learn how to be disciplined.
Right.
It'll suit you well when you get into the stock market. I guarantee you, because you'll see how well $5 go in the market. It will go, right? If you learn how to put it in the right shoes.
Absolutely. I did have a question before you go. I wanted to know if you could possibly do a show or do a live on how they do the bond auctions.
Oh yeah, on Wednesdays and Thursdays.
Yeah,
they have a lot of bond auctions. It depends on the calendar, but yeah, we'll do an economic calendar breakdown on that one day. Catch your actual bond auction right now, because right now the bond auctions are going to be very interesting. Why? Because what's happening, the bonds are being dumped. Right.
Yeah.
So this is gonna be a great time to really talk about bond, because yields are starting to spike now because they know cheap money drying up. So the yield, matter of fact, popped up today near almost 1.9 off that Jerome Powell speech. I don't know if y'all was watching. I know called you. I'm sure y'all was on it because y'all this is our lane.
And that $2. Oh, but I wanted to ask just to kind of piggyback off of over Chris' question. The way the dollar kind of went parabolic, was that like maybe foreign entities buying dollars in order to capitalize on the interest rates going up?
It's a matter of both, right? Because people are still trying to front run in this case, interest rates going up. Typically, in most cases like that, the dollar stabilizes at a point. But we know the dollar is still volatile because of why? You got currency rates in terms of foreign exchange, still trying to balance out all the supply chain issue in terms of who got the goods and services that's going to really carry the weight of their dollar, right? Or their currency against others. Mm-hmm. And why China's getting ready to cut rates, because they did all they search and destroy stuff early, decimated their markets, shaked out the weak hands of American investors. They getting ready to lower rates. And guess what we getting ready to do? Raise rates, right? So imagine what that's going to do to the currency values within that, because these are the two superpowers, right? Mm-hmm. That everybody measure it by, right? The yuan and that of the dollar. Even though people like to throw in the British pound and the euro, whatever, they stepchildren to this perspective because they can't, they're not in this perspective of the league and in that. So the dollar is just playing off that same reality. It's correlated to a degree, in most cases, to the 10-year yield because of interest rates. You see what I'm saying? And the banks knowing they're going to feed off that. But eventually it's going to stabilize and kind of, pull its way down because the liquidity of those dollars, even though they've been diluted to death by the Fed, obviously, right? Without that printing, once you take that away, you run off that balance sheet, it should begin to stabilize a little bit, right? The strength of it, it's going to take a minute, but that's how they level it, I guess, to try to keep the market balanced. in terms of production value and all this, that, and the third, because I think even before COVID, let's say, I think the dollar was kind of sitting at around, what was it, like, gosh, I want to say 92, 90, maybe a little more. I might be understating it, but just going back, we say pre-COVID, when you look at the dollar on a pre-COVID perspective, it'll give you a little semblance of how, it was being traded of value at the point. So, yeah, so going back before that, like actually 97, 98, so I was a little wrong. I was like, a little more than that. I know I was tripping. So it was stuck in a range between like 97 up near 98, 99. That was going into COVID. Now we know tariffs was in the mix of that too, right? Because it came, off a bottom of what near 89 under Trump, right? 2017, it pretty much crashed from 102 all the way down to 89. And then, Trump came into office, of course, 2017, whatever. And then it began to kind of slowly, gradually kind of increase. And we ran into tariffs and it kind of, apexed out and went sideways. And then it crashed because of COVID, of course, and now it's starting to rebound again, right? And so there's a lot within that. So we need to talk about that again, bring that back to the forefront and discuss the value of the dollar in relation to that of the bonds, in relation to that of gold, because gold is now, getting this ticket punch finally, which you knew was going to happen eventually. It sat and went sideways literally all 2021. It went sideways for the most part the whole year. So it's now starting to break out, and rightfully so, right? And rightfully so. So we'll do that correlation conversation or diametric, or that, the divergence of it to other assets, and we'll make that a conversation. So we'll put that on the docket as well over Chris. No worries.
All right. Sounds good. I appreciate it.
That's it, guys. So, again, we look forward to this. We'll see what the market going to do tomorrow. And we got 2 days. We just midway, right? We midway with all the fireworks and pop. We see what's happening right now. After I just while we were talking, I saw Netflix popping. So Netflix didn't probably put out some more spin news to get the stock popped like this. So either if they ain't talking about particularly buying a gaming service or something like that, whatever this pop is after I was on Netflix, I'm sure some gas news on to it. And then, this is just them trying to save the market. They did it with Microsoft the other day. Now they're trying to maybe, I don't know. Y'all know what this is about. They're trying to save face. Hey, Wall Street just nervous. They just trying to send money somewhere. They'll use any excuse to try to pump something. They know the best thing to kind of stop the market from bleeding is to hit a tech stock that's number one, obviously oversold, and or it's a way to kind of make people feel like we ain't done yet. All right, so we're reading into that. But after our Netflix got a big pop here from 360 all the way up to near 380 something. So whatever that was about, right? We're reading into that as it as necessary as it comes. So that's it, guys. I'm out, man. Until Sister Monica pops off the Urban Economic Empowerment Show, definitely tune into that on the Dagger Squad channel, right? The Urban Economic Empowerment Show, we do it every Wednesday at 6 p.m. typically around 6 p.m. If you want to be part of that, tune into that channel. Just Google Dagger Squad, or put it in the search box in YouTube, Dagger Squad, or Brother Garfield channel. It's changed now. It's on the Brother Garfield channel, and you might tune in and get some more nuggets. You will get some more nuggets when she go live and speak in business management. And so some of us will probably be on there as well, sharing the markets more in detail. All right. So that's it, guys. Appreciate you guys. Thank you, Oprah Ramsey. Over Divine Fuller, everybody, Oprah Sunny, Sister Monica, obviously was on, Sister Angie, over Sunline, everybody, Brother Brandon, Brother Mathis, everybody that tuned in, Brother Iori, the whole crew, Brother Everything, Brother Rich B. I mean, I could be on for days, of course, hitting everybody. Brother Marcel came through today. Been a minute since we've seen that family. All right. So shout out to him as well. Brother Sawa came through, Brother P Smooth. I mean, everybody, right? Again, obviously over Chris and over Marquise that's on the panel still here. We appreciate everybody. I feel to be humble. And everybody that tuned in probably that could not speak, we appreciate your patience that you do to this channel. And we implore you guys to continue to put this craft, somewhere in the midst of your daily existence, right? Learn a little bit as you can, when you can, right? So that's it, guys. Until the next one, guys, we'll see y'all in the next one again. Peace, power, and profit. Shimo Tep. And again, stay ready, guys, so you don't have to worry about getting ready. We'll leave on that note. All right.
Peace, power, and profit.
All right. Peace, power, and profit, everybody. Peace, everybody. Peace, family.